seat a little bit so we can get this training in. Do I need to? I think I'm fine with that. All right. Let's see. Are we crack-a-lacking, as they call it, in the South, or wherever they coin that term from? All right. Yeah. So we live. Great. Great. Let me cut this down and let me make sure I have my mic. Oh, no wonder. I'm tripping. Hold up. Okay, tracking. Testing. Can you guys hear me? I got my stuff plugged in, right? Do I? Oh, yeah, I think I got it plugged in, right? Can you guys hear me? Testing 1 2 3. Testing 1 2 3. Mic check. Can you hear me? Press 1 in the back chat. You guys hear me? Can you hear me? Okay, you guys hear me? Okay. All right, didn't know. I thought so. Hold on, now. I'm pretty sure I got this thing plugged in the right jack. Let me double check. You know, I might be over here. Got the wrong plug in, and over here just talking to myself, right? All right. So again, let me get the link to as well for the Hangouts. Again, you guys know I enjoy the Google Hangouts participation. Definitely, if you got questions, you can ask them in real time. Hold up. Oh yeah, I forgot I got the CNBC on as well. Let me make sure I get that taken care of too. Okay, great. All right, so again, let me grab the link as well. About 30 minutes behind a little bit here. I said I'm gonna start at 4, but I'm pretty sure people trying to get their trades situated, trying to go over what they did for the day. They're recouping. They got families. Again, there's always seemingly there's no opportune time. But again, we're just trying to find the time to get a useful schedule. My goal is, like what I was saying earlier, is to be able to go live throughout the actual trading day itself, specifically for you guys. Typically, I know I always open my platform up to just the general public, but this is a service where, again, I'm offering it. My time, for you guys is value, right? So with that being said, also again, family first. All right, that being you guys in that regard. So, but I'm also, I want to get a consensus because I know these are just 1 month sessions. In terms of that, typically I had to set up. I just got started, so I'm, doing them pretty much every Sunday until I can really get a lot of the things around my household compartmentalized, so I can also regiment it into daily functions as well. Which most times you guys are pretty much focused on the market anyway, right? Because it's trading hours. But with that also being said, a lot of you guys are focused on your trades, right? And it's hard to kind of be focused on your trades and also still try to do some training, which some people could do because we're used to that. Over here where I'm from, we're used to doing that, which is also good too because sometimes it helps you with your trade. In some cases, help you have a second opinion, third opinion, fourth opinion too. But either way, I do want to be able to be flexible to you guys is pretty much your guys' need in terms of time wise. So from a consensus perspective, if you guys say, well, hey, this date serves me really well, or during this time of day, I'm more open, and available more or less because I don't have tasks and things to do. Obviously, be it work, be it children, be it whatever. Or if you're not just kind of really overly focused in the market, then in that moment, again, we can come on, we can do some stuff right during that time frame, right? Or we could do a market cap analysis at the end of the trading day every day. Go over some stocks, plan for some stuff for the next day. Again, the training is what's more important. in the long run, because again, we're trying to reposition, and build on our strength values, right? So with that also being said, I think that's why, having a structured, criteria or a curriculum, if you want to call it that, if you will, is always vital, because again, it puts us in a stage where, okay, here's something that's, some quantified information. Here's some, some very, potent information that can really benefit from, where you can take notes or whatever the case like that. Again, we're trying to build strong, strong habits here, strong discipline values, our diligent values, the whole nine. So, again, I do want to be flexible to that. So just putting it out there. All right. So if you guys have, suggestions, I am a, very, open-minded person. I'm pretty sure you guys know me at this point. I want to be able to facilitate you guys' again time need, so we can all meet on the same page. All right. So again, I did post a few earning plays in the back chat earlier too. I'm pretty sure you guys saw them. For some of the stocks that had earnings today, notable stocks, so to speak. There's a lot more, obviously, but again, Restoration Hardware being one of them, when the big one out of the four for tonight through Stock Whisperer. Again, Coop, we have Smart Sheet, and then we all had Mesa, right? So again, some really, really nice high flyers after hours in terms of Restoration Hardware. I remember trading that stock for the last two earnings reports. It's Q2 and it's Q1 earnings report. Did really well on it in the second Q2 report as well. This one here was very, very interesting because of the fact that, again, this whole idea of the release of tariffs, right? Again, Restoration Hardware is a company that gets a lot of its products from China, or some of the manufacturing of their products comes from China. They are in the home furnishing business, home furnishings, so to speak. They also have other things as well that they do within that space. Some of their subsidiary companies that's underneath them, or subsidiary brands, I should say. But interesting enough, it was expecting pretty much a really big move based upon the options market. So when I was looking at the option flow chain for Restoration Hardware, I was seeing some major call buying, right? And this was happening ever since like last week, a couple of weeks, up until today. A lot of people were really bullish in terms of the options market for Restoration Hardware. And we know that's only one deciding factor amongst many when it comes to doing, proper due diligence, especially if you're going to play an earnings play, which is always tricky and is always very, it's not recommended for, for anybody just to do it just because. You have to be a little well studied in terms of understanding some values of how to read the fundamentals, how to dissect, some basic criteria in terms of chart analysis from a 3-month to 6-month perspective, how to, be relevant when it comes to, or how is the information relevant towards the value of the guidance from one quarter to the next, meaning did it guide up, did it guide in line to the already, proposed projections from the previous one, or did they lower the guidance, right? All those things are very important. And we do know that in terms of an earnings report, the guidance value, meaning the projected outcome or outlook into your company in the next quarter or 2 or 3 quarter or annual value, it has a lot of weight value in terms of how analysts, go about, passing a favorable judgment, or pretty much, giving that a bad press release value, how they, will figure that the company will be able to respond or report their numbers going to the next, subsequent quarters. So, again, I really, really look at the guidance a lot. Some companies have gotten to the point now where they don't necessarily put out guidance. Some, because they know most investors and also most analysts are always weighting the value of the guidance to the overall, I would say health of the company, right, or the corporation or whatever it is. So what you've been seeing with a lot of these companies that have, been having decent earnings, they'll do pretty good on earnings per share. They may come in line on revenue, or they may even beat by, 0.25% or 1% or 2-3%, and the stock will still sell off. And that's coming from an upbeat from the previous quarter, right? Because keep it, within that next potential guidance, when people are thinking long-term in terms of the investment, they want to have a subsequent value where they can see another, 2-3 months of growth value within that stock. Because we know that there are a lot of finicky traders out here now where they're not necessarily, holding premium at the rate that they were doing back in 2017 when it was just an ultimate bull market, right? Everything was running to the ceiling, right, to the roof, so to speak. and it just made for easy hold or swing trade for some of the things that were happening back then. So again, the market changes. We know this is a very bipolar system. The global commerce market changes overnight. Again, a la the G20 summit. The whole issue with that, the WTO, World Trade Organization, them having a big issue and needing to come to the table with that on the back of a trade war, or quote unquote Cold War between China and the USA when it comes to tariff values and taxation, pretty much for imports and exports of goods, which both parties benefit from that open border reality in terms of that trade. More importantly, America obviously seems to from this perspective, they are pretty much getting the short end of that stick, because being we are the most decadent culture on the planet. I mean, we consume more than anybody on the planet, literally. Just per the populace here, you're talking about well over 340 million people, 350 million people, give or take, and we consume more than pretty much at least and you would think even China be having the biggest population, we probably consume more items and goods into that nature than even them, and they well over 1 billion. Because again, you look at the average American household in terms of how we, from food to regular consumer staple goods and products, shirts, clothing, this, that, and the third. Our houses are just loaded with stuff, right? More than we really need at the end of the day, from a place of just necessity. But again, with that, we're constantly, again, up in the ante on what we can have, what's new. We constantly revamp our products very fast. Most countries don't. All right, we from one phone, I upgrade to the next. I mean, you guys get what I'm saying. So long story short, again, in that moment, what's happening here is that there's a lot of, again, money flowing out to other countries because of that, because they're importing a lot of the products that are being manufactured or whatever the case is coming from these countries, right? So from a businessman perspective, they're actually gaining more revenue off the back of our over consumer value, right? And the tax value that they're giving these countries or continents or whatever you want to say, breaks from the tax breaks, they're actually milking the system, right? But they'll charge us again exorbitant amounts of fees for these products. Again, 1x, 2x, 3x value for a product that's only costing $20, $30, $40 dollars to make, sometimes less than that. Again, we did the whole theorem about the Jordan shoes costing about $16, $17 to make. About $20-something landed into the to the actual factory, the Nike factory in the United States for distribution, and they will mark that shoe up to $200, $300 plus for a price value, right? So again, you can just do the profit on that, and the profit margin on that is staggering. And those shoes obviously are going to sell in most cases. Ideal, especially because the marketing advertisement is so strong, and in most consumers' mind, it's like, okay, I gotta have it. But never disregard the fact you just bought a pair or some other shoes, about $100, $200, about 2-3 weeks ago, a month ago. So again, you have an overpriced stock of this, cloth that doesn't necessarily appreciate in most cases, and we're just consuming, right? As soon as it gets scuffed up or something happens to them, you on to the next. Again, that's crazy. That's crazy. But maybe just because I'm getting older, who knows? But either way, I thought that was just very interesting to speak on that, because Restoration Hardware, again, was able to use the value of this good news coming from the G20 summit that they're going to ease up on some of these tariffs here, right? China giving so-called America a break, America giving so-called China a break. So that became also a driving force, besides the fact that the stock was kind of still somewhat in the oversold setting because they got beat up pretty bad. Over that time span from the last quarterly report to now, the stock was kind of in a very sweet spot to be, to kind of get a nice little boost, right? Going over some of the numbers, I did post some of that stuff again in the back chat about Restoration Hardware. I was feeling very bullish about it. I was feeling very bullish about Restoration Hardware into its earnings. And again, typically everybody does their own due diligence for their value, but for me, it was just, okay, this is what you want to see here. Coming off overall market sentiment that's been obviously heightened too. People looking to buy the market, looking to kind of catch some of these retail prices, at dirt cheap prices and take advantage of it, right? So again, coming from where Restoration Hardware was, If you look at the monthly or the weekly chart, the stock was just, again, in a very nice sweet spot. It was sitting right near the VWAP on the monthly. It had a nice Greystone Doji coming in, closing out pretty much the month of November, regular Doji, excuse me. So that just made it for, a bullish, opening of the year, with them opening up their earnings, knowing that they actually put out some good, numbers throughout that particular last quarter, meaning their growth value had increased through the earnings per share. They had went out there and made some acquisitions. They beefed up their book. Again, the home furnishing, value or sector within the subsector of the home industry as a whole was obviously needing for what a pop, because they got hammered. Some of them got hammered out of the last earning, right? Because of the fact that the housing market, value had slowed down. Meaning, just people building houses. But when you talk about home furnishings, people still buy home furnishings. With or without a value of tariffs, right? People, again, kids go off to school. They need furnishings for their new apartments and this, that, and the third. Not saying they all rushing on Restoration Hardware to get these stuff, but again, they do baby cribs. They do a lot of other stuff as well. Again, they are in a very unique space, in terms of, what they offer as a company. All right. So long story short, again, it was just for me, it was just a give and play to take this one here long in the earnings. And the one thing I'm very kind of kicking myself about as well is that I did not get a chance to get my calls filled in this play. I was looking about the calls as well, and I got, again, pressed for time doing other stuff. They didn't get a chance to get my calls filled as well. But either way, slam dunk trade, caught it in the earnings. Long story short, dropped the confetti. Right. So again, it was just interesting. It was very interesting that I was just speaking about some of those, or posting some of those in the back chat, meaning in the Discord room, and here we are benefiting off of it. All right. So that's that. All right. So again, let's get right into it, guys. Again, let me get this link so you guys can come on. And forgive me, I know I look like I'm half asleep. I had data daycare duties the other day. That's why I couldn't necessarily do nothing. I had the little guy while the wife was kind of enjoying herself. She actually had a very, very important PMP exam that she had to take. Obviously, she being military. To build up her ORB basically for her promotion value, not just for a promotion, but to also add and beef up her resume for promotions. She's close to getting her lieutenant colonel ranking here. Obviously, next year, somewhere around maybe spring or summer next year, she should get pinned to lieutenant colonel. So I'm super proud of her. Obviously, she had spent an entire month really training for this test. It's one of the hardest tests out there to take. If you know anything about acquisitions, whatever the case like that. One of the more, very, stringent kind of, industries to be in, very highly scrutinized, whatever the case like that. You got to have your stuff down pat. And, it required a lot of her to really focus in on this opportunity. So a lot of that was me having to kind of, keep the little guy situated, whatever the case. So she took a test Friday, long story short, right? And, she passed, and again, it's a hard test to pass. Most people have to take it 2 or 3 times. And the government will only pay for you to have one time under their dollar, meaning the U.S. Army. So if you fail, you got to pay for it out of your own pocket the next time. So again, we was like, nah, we don't want to pay for this. We need to, whatever we need to do to facilitate you being able to have the space to study and do what you need to do. Then let's do it. All right. So again, she passed. So I wanted to give her some space to be able to go out there and enjoy herself a little bit, enjoy herself as a whole. Take the little guy off her hands. And give her that because she definitely earned it. So I mean, I'm super excited for her. All right. So again, that's whatever. So forgive me, guys, for not being able to go live yesterday. Basically, that's what I'm saying here. Do forgive me for that. All right. So all right, let's crackle at this thing. So pretty sure, because I'm pretty sure you guys got families and stuff to take care of too. It is that kind of sweet spot before the kids start getting ramped up. Dinner's got to get cooked. This, that, and the third. Right, it's about to be on. All right, so let me grab this link here for the Google Hangout so you guys can come on if you so choose. I'm always going to make sure I provide that. All right, and then we'll get some little training in here. Then again, we're going to do some more stuff tomorrow too. That's my goal. I want to do some more stuff tomorrow as well. I'm going to post it in the Discord, and I'm also going to post it in the back chat of the YouTube. So we can ramp up some knowledge here, get some nice little studying in, and build on the pertinent information based upon, again, where you guys are. So the whole purpose of what I want to really hammer in within the mentor value is, I want to meet you guys where you are, right? Again, I never claim to be a self-proclaimed guru, this, that, and third. I do have a level of, my intuitive intellectual value that I do bring, from a place of experience, but also more so for being able to, again, dumb the market down in a lot of ways to make it, more simplified for a lot of traders, depending upon where they are at in their career as a trader or an investor. Doesn't matter whether you trade, again, equity stocks, again, your ETF based, you're a future trader, you do mutuals, you do, again, Forex, a lot of it still implied value and trying to understand some basic fundamentals, some basic technicals, right? And how to apply that, to that particular asset, so to speak. So again, the goal is to work smart, not hard. And so everything we do, we go, into the situation, prepare, much as possible, right? We're constantly talking about, preparation, how important it is as a whole to be, again, a well-founded trader, right? So today, again, I want to kind of speak on just coming off the back end with our last couple sessions. We were talking about a lot of, psychological values. Again, I ran the PDF book the other day, the audio book. That's one thing I was able to do. Nothing else. I said, well, at least put something on for the family. The Trading in the Zone book by Mark Douglas, very phenomenal book. I mean, phenomenal book. Whether you have the hard copy or you just got the audio book, doesn't matter. That's one to keep in your archive and one to have, and you should want to share that with others too. But I do have the PDF. If you guys do want it, I do have a copy of the PDF as well. All right, so, and that's on the backdrop, the backdrop of us doing, another one we did the previous Saturday as well. So again, I do want to kind of keep that energy, going forward. And so today I want to really, go into, the book that, most of us swear by as in trade, as traders and investors, in terms of, we're always, seeking to be better, day traders, right? So, I felt like, so, what, I could do this, probably I could do this today, but let's go to the crux of what we all, aspire to every day. And that's, our ability to want to be better as day traders, right? Whether you do or you don't do it, because it doesn't matter, but you still want to be in a position where you can just, access the market in opportunistic moments and, be able to capitalize from it by understanding some of the, the core competency things you need to be focusing on as a day trader, right? Some of us are already kind of, founded in a lot of ways, but we always can improve, right? This is always this is an ever improving industry, so to speak, right? So it's important. All right, so jumping right into it, guys. Again, I do have the link posted if you guys are, definitely want to jump on, inside the Google Hangout. Please come on, because you may have questions directly. If not, again, you can post questions in the back chat, this, that, and the third. Doesn't matter. I just want to make sure I'm able to, I'm able to facilitate your questions properly. And forgive me, I am a little tired, I admit, and I hate to say that, but again, y'all, long night with the little guy, right? Long night with the little guy. All right. So, all right, so let's jump into it here. All right, so right now, I know it's probably people probably got kids. So who we have? I know we have Over Gordon on right now. Is there anybody else in the back chat? I see there's a couple people watching. Right. I know, again, we got a total about, 5 or 6 guys. Well, excuse me, 7 guys somewhat, set up right now. So definitely, I want to make sure, well, I should say 5, that we have everybody kind of present that wants to be present. One second here. Let me grab, let's get these, getting this together here. All right, so, all right, where's this link for the book too? I posted it in the, it's probably the other one, because I do want to have that one up. I wonder if it's going to allow me to share it like this, because I think I pulled it quickly from. Okay. Pulled it strictly from my database, but there is an online value to it as well. Online version, excuse me. All right. Should have had it up and running too again, but I was just really trying to get set up so we can get the grinding. But either way, I'll get it. Whatever. Whatever. All right. So how to day trade for a living, guys? So let's jump right into it, guys. Let's get it. All right. So again, understanding that again, we all had to begin somewhere. So when we think about day trading, the one thing that really caught our attention, the guy was really excited about this opportunity when either someone brought it to your attention or you just saw, well, I could do this. Like I've seen other people do it. Whatever it was that sparked your interest to want to become a day trader, the lure of being able to do it, day to day was just like, like very, eye-catching and mesmerizing to the idea that you can make a certain amount of money in a day's time of trading the market. Knowing that, there's always assets moving, there's always opportunity long as the market is open. And we've heard about other people, doing this or doing that and making this and making that. And again, it kind of lures you in. You're like, man, I want to do that too. Who wants to be working a 9 to 5, right? Especially there's all the opportunities out there that I can peruse that doesn't require so much of me, right? In terms of, physical time and physical labor and stuff like that. You have to go out and go to a place and drive gas, burn gas, do all that kind of stuff, whatever. So, as a day trader, again, you're, that freedom is that you can do this pretty much anywhere around the world, as long as you have a Wi-Fi signal, laptop, cell phone, computer, tablet, some capital, right? And obviously the basic, you got to have some knowledge. So when we think about, the idea of what it means to be a day trader, especially for a living, we talk about a living here, right? Some people are doing it part-time for supplemental income. Others are doing it for a longevity value, for a growth value. When you kind of went, filled out your first little so-called application to get your first broker, and it was asking you all these kind of questions. What kind of trader are you? Speculative? Are you doing this for growth? Are you doing this for income? Whatever the case. That's them just pretty much trying to see what kind of mindset value trader you are. I mean, are you more high risk? Big reward kind of scenario? Are you low risk? Decent kind of level of payout? Or are you annual based investor, value investor? All these different things matter. So again, talking about the book here, basically as it says, it's a beginner's guide to trading tools and tactics, money management, discipline, and trading psychology. Right, going right back to that whole idea what we was talking about over the last 2 weeks in terms of what trading psychology. Now, it's no secret at this point that psychology is pretty much a major ingredient, all right, when it comes to being a better trader. Right, because a lot of times what you have is that some people can have a lot of good technical training in the market, how to break down charts to the T, how to do all these wonderful things when it comes to applying or again being able to kind of dumb the market down in terms of the chart value, in terms of market sentiment, this, that, and the third. But one thing that's missing with a lot of traders is that some people don't have the mental fortitude to be able to deal with, the ambiguity of the market, so to speak. Right? Markets go up, markets go down. Again, on a pretty much on the dime. Energy and momentum can shift, and before you know it, where you was trading stock to the upside, it'll be down 2%, 3%, 5%, and just start dropping. Because again, news happens in a nanosecond in this game. And if you're not, hardwired properly, excuse me, you would, obviously, fall victim to a lot of, I guess blaming yourself for not making good decisions, whether you had to stop loss, whether you didn't, it'll start wearing on you because no one likes to take L's, right? Because again, with losses, the more losses you have consistently, without a good ratio of wins, it'll start, wearing on your mind a little bit, and kind of, making you kind of, feel like, maybe I'm, in over my head. Maybe this is not for me, right? Again, but even in a moment where you may have taken up, a L or two, again, we want to make sure we minimize those losses because that matters as well. What kind of loss are you taking, in terms of the size, right? That may be a scenario where you're overexposed, meaning you got too much, share value out there in a market that's not necessarily rewarding to that kind of level of trading, right? This is not a free fall buffet at the local Golden Corral. You can go back and get much steak as you choose, much fried chicken as you, whatever. You want to parcel out your opportunity in a way that you can feel comfortable, right? And knowing that you can handle what's on your plate, basically, quote unquote, right? So when you learn some basic system analysis when it comes to learning how to trade, right? Again, you go through technicals first, so to speak. All right, then you kind of move a little bit into the realm of okay, a little fundamental value where people are starting to say, yeah, you want to look for cap, you need a value, to want to, a reason, so to speak, to want to trade the stock, beyond the fact that, hey, I showed you how to look at, how to read the candlestick chart. I showed you how to, put in the, the indicator in terms of the 9 to 50, the Bollinger Bands, the stochastics, the MACD, the TTM squeeze, whatever you use to trade with the Fibonacci bands to kind of give you a kind of a scaled version of what you want to look for in terms of if they move up to this point, that's a buy. If it moves down to this point, that's a sell. If it stays in this nice channel here, that's a neutral position, right? So in that moment, you want to be very keen to making sure you watch those levels throughout the day because that's what's going to protect you. Now, if it falls back to this level, make sure you sell. Don't hesitate. Sell. No, listen what I tell you. Sell. Right? Anybody can tell you how to do that all day long, every day. Right? You can easily receive that kind of instruction. As long as you follow the instruction, be they right or wrong, you should be, again, if they got a good level of risk management into play, you should come out very well in that trade. Even if you take a small loss, because again, a small loss is much more better than taking a big loss, an unnecessary big loss, right? A foolish big loss, right? Something that you just don't want to do if you're serious about preserving your capital, if you're serious about building on your craft, if you're serious about making sure you hold yourself accountable, from a distance perspective, right? Because again, those things matter, right? So again, moving forward, under that mindset in terms of how we value, what it means to really be a day trader, to go into the market, in search of two things, pretty much price action and profit, right? Price action is pretty much fundamentals, technicals, and investor sentiment all rolled up into one. That's basically what it is, because you got to have a need, you got to have an interest, and you also got to have other people that also have that same kind of mindset. And the reason why everybody kind of corralled into one particular asset or equity or stock or whatever in that moment, because there's something about it that was enticing to the point where it has everybody shopping in this store as opposed to shopping at this store over here that has no foot traffic, meaning no volume. The technicals look bad, meaning it's, the racks are all kind of messed up inside of there. The fundamentals ain't good because they don't do enough advertising on TV. They don't have enough, consumer incentives to that regard. So it's like, well, why do I want to come to your store when it's popping over here, right? It's constantly busy over here. Right? It's kind of like your favorite restaurant. So again, the market is pretty much in that same likeness, when you really think about it, right? So again, we're masters at learning how to dumb it down to the tune where we can apply what value of fundamental analysis that we like to the market, what technical value that suits our need, and we can just go out there and trade, right? Because we all have various values of different trading styles and tactics we use, but the core competency things that we all believe in are pretty much the same. Again, technicals, fundamentals, investor sentiment, right? That's just pretty much the I guess you want to call that the holy grail, the three fundamental values, analytical values that you need to have in order to be a solid day trader, right? You got to have a pretty decent technical setup. You got to have a pretty, you don't have to be, expert at fundamentals, but again, a good understanding of how to understand and interpret fundamental analysis, right? Catalyst, earning value, this, that, and the third, how to, book value in relation to their competitors, this, that, and the third, quarterly reports, when they drop their earnings, all this kind of stuff. And then again, investor sentiment, which is a revelation to the value of the price action, volume, abnormal volume, this, that, and the third. People interest value, right? Social media values for stocks, stock tweets, Twitter, whatever you use, Discord. Again, a lot of people talk about something. Chances are, there might be some buying, some kind of feeding frenzy within that asset, right? So I'll just put that out there. All right. So let's jump into this stuff, guys. So as of now, can you guys hear me clearly? Is everything fine? Am I speaking clear where you can hear me? Is the mic fine? Everything good? Again, I'm just doing another little mic check here. I had a little issue earlier. I just want to make sure it was right. All right, so if you guys can hear me clearly, just throw one in the back chat. And I'm about to share my screen here, and then we're going to jump into it. All right, should I do a side? Yeah, I need to set LBS up. Yes, I need to. Let me share my screen here. All right, so you hear me? Okay, great. I just want to make sure you guys hear me. I know there's a little delay too. Obviously, when I say stuff, it's a little delay before it gets to you guys. But I do want to make sure everything's solid in that regard. All right, so let's jump into it here. Let's get right into it. All right. So again, how to day trade for a living, right? Again, a beginner's guide to trading tools and tactics and money management, discipline, and trading psychology, right? How to get your mind right so you can get your money right in a lot of ways. So again, we all have different things that we're trying to build upon in our, again, our repertoire value of trading. As I always tell people, don't focus too much on your weaknesses, more or less than you need to focus on your strength, because the more you focus on your strength values, the more it'll overturn your weaknesses over time, right? Because once you find that you're good at something and you know how to do that really well to the point where it makes you feel, again, really, solid about, your practices in terms of the things that you're doing, you don't necessarily focus too much on, on what you feel like you're just not good at that one. Because again, a victory is victory. Hey, I did that right. I called that right. I charted that just right. I caught, the top tick just right. I caught the dip just right. I mean, you have to be, expert catcher at the very bottom dip, but you brought in at an area where, it gave you some value of comfort to push you into some level of profit, be it up or down in the trade. Because again, you saw something within that trade that gave you, indication that, hey, it's a go time right here. The volume's coming in, right? Again, we got a shoot star. We had a Dragonfly Doji, hammer here. Whatever the case, we had a consolidation, flat top breakout, probably going to happen here. We saw, a wedge pattern here. We saw a bullish pennant here. Whatever it was, again, trends, patterns, volume, price action, so to speak. So, again, that's confidence build. Those are confidence builders. The more you're good at getting those base hits and being consistent, the better you will become more empowered to, again, make those kind of, executive decisions going to the next trade again and again and again and again. Based upon, obviously, at that point, you want to become more disciplined as you go. The better you get, the more disciplined you want to become, because now it's a game about what? Preserving your capital, preserving your gains. It's not so much, okay, I made $1,000 today or $3,000 today. Now, let me go out there and risk all of that I made today back into the market for the chance to make $10,000. Right? That's the wrong way to trade. And unfortunately, too many of us trade under that mindset. Right? That's when you need to realize that when you heard, I think in the book Trading Psychology, when they were talking about, if you got a $10,000 account, typically you're only supposed to risk about 20% of that in any given trade. Right? 20% of that. All right. Don't seem like a lot when you talk about 10 grand, but you talk about, again, $2,000 when you got a leverage account up to 10 grand. You want to be able to really maximize the trade. But basically what that really means when they're telling you to do that, they're saying, hey, you can always scale into a trade as opposed to going all in a trade and the trade goes against you, which obviously exposes you to a bigger loss, because now you got all these trades, these shares out there. And if the stock moves violently against you in any kind of form, that can really hurt your hurt your buying power. So it's always easier to scale into your trade if you can than just going all in out the gate. Right? This is, again, it's not Vegas. Right? I know people like to liken it to, casino, this, that, and the third, but that's just not responsible. That's just not responsible. Excuse me. So, we want to make sure that we're, again, making good decisions, because this is a longevity value here. So, opportunity is about longevity, because the stock market is going to, it's pretty much not going to close. The company you may work for, they may go out of business, but you best believe the stock market is going to be around, right? Because this is where everybody, this is where everybody have their money at. This is where everybody houses their money, their retirements, and this, that, and third, in a lot of ways. So it's it's in their best interest to make sure that they keep this thing alive, right? So again, just kind of going over the table of contents here, for this book. Excuse me. Some very interesting bullet points here. That I just love this book. Me personally, I love this book. I'm pretty sure you guys have read it. Some of you guys have, some of you guys may not have. But it's just, I think everyone should have this. Just like kind of like having the Bible. This is like the Bible of the stock market. There's others out there too. Don't get it twisted. But this one here really gives you a good in-depth analysis on how to really, really, come at the market from a place where you can have some real good insight, right? Some really, really good insight. If you really take the time to really go through the book, and for every lesson that you go through, every bullet point you go through, every chapter, whatever, and you take your notes from that, and then you go back and revisit it later. Same when you do like a good reading book that you like, you'll see over time that this stuff becomes more and more fluid and relevant to your way of thinking and how to break it down, right? So again, it's just a really, really good book. So what I want to do, being this is about mentoring more or less than me just kind of going off my value, I like to make sure I involve you guys' input in this opportunity, because it's about what can we build together. How can we expound on where you're at in your level of trading to make it more relevant for you day over day, right? Meeting you where you are in your your level of growth and expectation, so to speak, right? So we all have our own different values that we're trading, different levels that we're trading at. So if you guys can see this, I'm pretty sure you guys can see this here in the back chat there through the screen here. What particular aspect would you guys like to focus on today in terms of this mentor session today? Do you want to talk, speak about just pretty much how day trading works, day trading versus swing trading, buy long, selling short, retail versus institutional traders, risk account management, again 3-step risk management values, trading psychology and risk management, how to find stocks to trade, pretty much how to build a watch list, this, that, and the third, how to go out there, pretty much search for gold, how to be a good prospector, alpha predators, real-time intraday scans, planning to trade based on scanners. Again, there's a lot. You guys can see it. So if you could, type in the back chat what particular sector would you guys like to touch on today? What chapter? What subsector? Whatever. So we can kind of go into that. Let's try to see if we can find, and we can touch on a couple of them if we can. But again, I just want to get you guys feedback here, so we can kind of have an open forum value, where we can just really meet you guys where you are. All right, so let me go over here, open up my phone so I can see, just in case you guys typing, because I can't see it from the screen with it being shared here. 1 second. Hold up, where's my, okay, this dang tripping. This dang tripping. All right, here we go. All right, then. All right, so again, you say chapter 4, Brother Dave. You say chapter 4. All right, so chapter 4. Okay, so again, chapter 4, how to find stocks to trade. Right, alpha predators, real-time intraday scan, planning the trading based on scanners. Whatever. Right. So let's say, what particular in this particular subset? If you can see this here clearly, let me see if I can blow it up a little bit here. All right, so you got alpha predators, real-time intraday scans, or planning to trade based on scanners. Which one of those really capture your attention, Brother Davey? Right, because again, that's a really, really good chapter too as well, because that's one thing that a lot of people have problems with sometimes, because finding stocks to trade, especially if you don't have an active scanner out there for you. Obviously, you can build your own scanner through, TOS, Thinkorswim, and some of these other little platforms have it where you can do that as well. But, if you learn how to fish for stocks the old school way, how to find those, hidden gems, without necessarily having to, go that route, and some of these, paid scanners in some cases, which they're phenomenal because they really help, lessen your work you have to spend looking for stocks to run. But again, you'll have a more appreciative value on how you, again, go about doing your daily business at being a fisherman, more or less, than waiting for someone to bring you fish, right? So I think that's very important, because I really started out, when I, really got excited about day trading, I was really good at finding stocks. I mean, true story. People come to me like, especially like last year, like, dude, you looking for a stock? Go ask African for it. He always finds them. He always finds them. I don't know what he's doing, but he always finds them. And this before I even had a scanner. I would just literally go into the news publication. I was in and out of these different news publications. I was on Googling stocks about this. I just put in there like, what's the best stock for this? What's the best industry for this? And I would just, data search. And then I just streamline, take notes, write this down, cross comparison analysis, go to the social media sites for investors, see what everybody was talking about as well. And I just started doing it just like that. And to the point where I was like, okay, now I have, selection of stocks that I'm going to look at for us today. These are the ones that most people are talking about. So tomorrow they should be in play at some point, right? So again, I'll present that watch list to all the Discord rooms I was in, all my peers, whatever the case. And they're like, man, this is a nice watch list, this, that, and the third, And again, we have, if I had like 10 stocks on there, maybe 2 or 3 of them in there be golden. And the rest might be duds, but in that moment, that's a good ratio. 3 out of 10, that's a good ratio. So again, it's about, again, finding ways to put yourself in the game. And because again, we talk about technicals, we talk about fundamentals, and we talk about what? Price action, right? So, okay, you say, not sure what alpha predators mean, so that could be a great place to start. Okay, yeah, so let's jump right into alpha predators, right? So alpha predators. Again, I do have the link, guys, in the back chat too. So if you do want to come on to the live stream, definitely come on into the live stream, mute your mic, and that way you can ask your questions in real time too. So again, I do, enjoy, interaction. And that's why I like to base these mentor sessions, pretty much like a workshop. That's what they are. I mean, we're traders. We're not just, sitting in some university where the teacher's just in there reading off of lines, blah, blah, blah. No, we need to be interactive, right? Because again, I can only know exactly what you're thinking if you're speaking it or you're writing it in the back chat. So again, unless you're just busy with family, I understand that too. But do come on to the back chat here. That way you can, we can, interact with each other, vocally, and you can get your questions answered in real time as possible. To do, that way we don't have any delay, pretty much. All right. So alpha predators, right? So when we talk about alpha predators, right? So let's go right into it. All right. So chapter 4, right? How to find stocks, right? Your next challenge as a new trader is how to find actual trades. All right. You may understand how day trading works, but when it comes to actually finding setups in real time, it can be very, very difficult, right? We all been there, right? At some point before we got better in learning how to, go out there and fish for stocks, meaning we was always kind of waiting on somebody else to give you a stock, right? We've been in and out of these rooms where, you guys, have people constantly ask you, hey, you guys got any tickers today? Hey, what are you trading? Right? Hey, what are you trading? But typically they never just, necessarily posting trades of their own. And I don't know if it's that, lack of, embarrassment, or they don't want to find that they're wrong and being ridiculed. I don't think that way, because if you got a stock that you're thinking about, post it. Let if people willing to give you their feedback on it, excuse me, the insight on it, then by all means do it. Why wouldn't you? It's free information. As I always tell people, steal from everybody, right? Find your own niche or niche, but steal from everybody. Meaning information is power in this industry. And a closed mouth does not get fed, right? A closed mouth does not get fed. Right. So again, there's no pride in me when it comes to this market. None. I ask questions still to this day. I got my level of mentors too. Right. I got my level. I mean, you guys are my peers. Let's not get it twisted. Again, I know I'm humbled that you guys are partaking in this mentor session, under my so-called leadership, so to speak, a lot of ways. Right. But however, we're still peers at this. I'm no better and no less. We're here to learn how to be consistent, right? And again, by that very same narrative, it's just incumbent of me to want to provide the best I possibly can to my peers, because again, why wouldn't I? Because it makes all of us better. And if all of us are better, we all can trust one another sometimes when it comes to valuable information. Sometimes when we might be a little lacking or slacking because of time constraint or whatever, I can code it over Gordon and say, hey, I see the heat map is spiking over here in the financials today. What's popping over there? Is it is it an outlier? Is it a one particular stock over there that's causing the whole sector to be popping? And he may be a big proponent of that sector. Like, hey, Goldman Sachs, this, that, and the third. Morgan Stanley, this, that, and the third. This is what I see on the chart for the setup real quick. Then you can go do your own due diligence on the behind that, and then again, we can find possible profit value in that particular trade. That's what a good think tank's supposed to do. Right? That's what a good think tank is supposed to do. Right? It's about having the best interest of everybody. Again, we know everybody don't have the time always to speak, saying, hey, here's this stock, here's this, that, the third. Everybody got to do their part. But ultimately, you do know you have trusted people you can go to get some good, valuable information, sometime on the whim when it matters. Right? So that's why I love, again, a value of a good think tank, right? And good interaction, because that's just important. Right? So again, I certainly experienced this as a new trader, right? I was often able to see setups in hindsight, right? We all know that, right? Everybody got a good hindsight trade. Man, if I just did this as opposed to that, man, I've been up by 10 grand. I've been up, 2,000. I've been up $20, whatever. We all, that's just part of the market. That's why you go back and do recon at the end of the day, or you should write down your trades you took that day, or record them visually so you can go back and replay those trades throughout the day, right? That necessarily doesn't mean that this, the setup and the same value will be in play the next day. Not just for that asset, for any other, but again, because the market's always changing. But you want to always have a compare, contrasting value that you can always go back and build upon, right? To find more, so-called hidden secrets in the market to make you better and consistent at your trading, right? So again, when I look back on charts during the day, it says, okay, I certainly experienced this as a new trader, right? I was often able to see setups in hindsight when I look back on the charts during the day, but finding them while the day was unfolding was very difficult. All right, so that's another thing. Hard to find stocks running throughout the day. What are you looking for? Right? Typically, you already have a watch list, or somebody already provided one. Sometimes stocks get information throughout the middle of the day, right? Some kind of value of alert, some value of news, and next thing you know, it's off and running, right? And you be like, man, did y'all catch this stock, this, that, third? If no one is actually calling it out, you could probably be missing out on a good opportunity. Right? From an intraday perspective, again, learning how to day trade for a living. Stocks move all the time, not just the ones that were up and moving during pre-market, or ones that had good favorable catalyst, a favorable catalyst going into the that trading day, and everybody's waiting on it, to get the popping. It turns out most of the people that ran the stock up during pre-market left no meat on the bone for what the retail traders traded after 9:30, and the stock typically ends up pulling back. And then again, it's like, man, that was a waste of doing all that studying for this stock. And it turned out to be a dud. Now you have no other stocks to kind of prepare for, because you put a lot of your attention into that one stock. Right? Now you just got the efficient. Or you're out there, now you're feeling desperate because you want to make a trade where you're just ready to trade, and you go out there and take some, very unfavorable position on stocks you never would have took had you did enough of the research to find out, whether or not it was available to trade, meaning to your criteria, right? To your standards. And now we call that chasing. Now you're chasing. Right? FOMO, fear of missing out, right? I just not even just making bad decisions, right? So again, talking about alpha predators, right? So alpha predators, right? You must remember, right, that retail trading does not work on all stocks, right? Retail trading, right? So what do we mean by retail trading, right? We just spoke about that a little bit, right? So again, it only works on stocks that have high relative volume, right? Some stocks like Apple Inc., right, ticker AAPL, right, will on average trade millions and millions of shares each day, while other stocks on average may trade only 500,000 shares a day, right? Again, talking about price action here. How vital is price action? It's pretty vital. It's pretty important, right? So again, just knowing that you need people to be buying, and you need some sellers to also be in a need to want to sell, so you can have that even exchange to a degree, right? In a way that moves in your favor. Obviously, you want to have more buyers. If you're really bullish on it, and then it forces the shorts to kind of cover and squeeze out to kind of cause the stock to go up. Inverse, if you're trying to short the stock, right? You need a triggering mechanism where your buyers are starting to sell, stop loss is getting triggered, which also helps your short position pick up more speed to the downside, right? So again, so no high volume will be a relative for what? One stock to another, right? So no high volume will be relative from one stock to another. You don't just look for high total volume, right? Even though it matters in some cases, but most times it necessarily doesn't if the stock is still got momentum and is moving under the volume that is presented. Although I still tell people every day, me personally, I typically wouldn't trade no asset out there that like the bare minimum is like 250,000 shares traded, and that's the bare minimum. The only reason I would take that trade is meaning if it had news or something happen, right, out of the blue, again, alert happens, something like that, and it's already traded like minimum volume, and now all of a sudden I know that new volume is starting to come in because I'm seeing it, on the level 2, right? I'm seeing it on the time and sales. The shares are coming in, people buying, whatever. I'm seeing it on the volume bar, right? So that gives me some, kind of confident knowing that okay, more people are showing up, which also make attract more people to the stock and also increase the volume. But just throughout the entire day and only trade over 250,000 shares, that's like that's like the bottom of the barrel. That's the bottom of the barrel scenario, right? Bottom of the barrel. All right, so 30 million shares of Apple traded in one day might very well not be higher than usual, right? Do not trade Apple unless it has a very unusual trading volume, right? If trading volume is not higher than normal, it means that the trading is being dominated by the institutional traders and high frequency trading computers. All right, we all know about the algorithm bots, right? I'm pretty sure you guys know about the bots at this point. I would think you guys know about the bots that buy the market. And what I've been doing a lot of times too within my study and research is that I'm trying to figure out when and where are these bots buying, because again, we talk about deducing the market to a regular job, right? The time that you take breaks on your job, right? The time that the company comes to you guys and say, hey, we need to ramp up on production during this hour here, right? We need a little boost here. And your supervisor come over and say, hey, we need a little pickup here. We're trying to get all these things done, during this time frame, to meet this quota. That's pretty much how the bots are kind of operating under that faction too, right? They're looking for significant buying opportunity on spikes, on sell-offs, right? Trigger mechanism to cause them to want to buy. They're also looking at certain time spans, time spurs that they want to buy in the times of the market, because in that moment you have they kind of quantified the market into a new wave of traders is going to come in at this time frame, right? So even in that moment, you can obviously be a part of that wave or that cycle of new traders coming in or exiting, whatever the case, and be able to benefit from that moment because of the fact that the trading volume, right? Be it, it picked up in some cases or it decreased and let you know, hey, is the volume starting to thin out now? It's time for me to kind of take this profit and move on, especially if you're already in the money, right? So again, that's very important, right? So again, so it says stay away from it, right? If it right? It means that trading is being dominated by institutional traders and high frequency trading computers. Stay away from it. So typically, if I were to ask you guys right now, when do you think the most institutional traders and high frequency trading computers trade the market? All right, from a span of from 9:30 to 4 o'clock, right? If I just ask you guys out the blue, what time frames throughout the market do you think most institutional traders are buying, or the algorithm bots are buying the computers? Algorithm bots are buying. The computers are buying throughout the market time frame on average, to your understanding, whether you know about it, you don't. So just throw a number out there, guys, like time frame, whatever the case, that you may think that the markets are being bought up by computers or institutional traders. Anybody out there throw time frames out, anything to your knowledge value that you may know about the market from that perspective? Let's see what you guys are thinking about here. I'm curious, actually, right? Because again, I've been trying to really find ways to qualify this stuff too, and quantify it. All right, so the first and last hour of the market. All right, so from 9:30 to 10:30, and then from 2 o'clock to 3 o'clock to 4 o'clock. Obviously, you got a lot of profit taking happening and also buying in that moment. Very, very good assessment there, Brother Davey. Very good assessment. All right. Let's see if there's anybody else got anything. Let's see if anybody else got anything. So first 10 minutes and last 10 minutes, right? Is that of the hour over Gordon, or is that just doing the market as a whole? First 10 minutes of the market opening up and the last 10 of the close, before the close, excuse me. Is there a specific value within that first 10 minutes and last 10 minutes that you're speaking of? trying to get some insight. So, got kind of again, we build on the ideal of understanding how to dissect this whole ideal of alpha predators, right? How to just market as a whole. Okay, first 10 minutes, last 10 minutes, right? All right. So again, just how to dissect the value of of catching these these moves, right? So it says, so if you, as you can see right here in this diagram, it says Apple day chart again, summer 2016 days that the Apple had a significant relative volume are marked, right? So again, you see right here, I guess it's around let's say June 21st, something like that, whatever the case, right? Again, you had a inverted hammer there. Market kind of sold off a little bit, came down, hit this little, hit this little bottom peak here, big volume here on this little screen, and an arrow right here. And so from that point, pretty much, up until, let's say, end of July, pretty much in a month time span, the volume had decreased, although it doesn't necessarily mean the spot price ain't going up within that. But you had another flux of new volume coming in around into the month again, or within that cycle from a month time span from the last volume spike to the next. So that's about a 30-day differential, right? Causing the stock to gap up on that particular scenario for whatever reason. Well, it could have been earnings, could have been a news reel catalyst, whatever the case. But abnormal volume came in, caused the stock to gap up, and then it went higher, right? So again, it's basically showing that Apple had a significant relative volume, or it said that it was marked, excuse me. So those days were suitable for day trading Apple, right? Because in that moment, there's abnormal volume, right? There's a lot of liquidity, basically, is what they're saying there, right? Now, typically, this could be true in a lot of ways that we, value these kind of stocks because the value that they have in abnormal volume, it gives us some understanding that people are buying. But even though that might be the industry standard, the way to look at this, I kind of somewhat, have a, alternate thesis to this. And I would say, again, we do want to look for abnormal volume, but we still need to see the right amount of price action between buyers and sellers to also give us some kind of favorability, whether it's, in our best interest to take a trade. So again, if Apple traded at 21 million shares or 30 million or 20 million shares, whatever, and then the next day it has 30 million shares, okay, get it. We know that's abnormal volume. But the same way that, again, like I was talking about, if a stock just, gets news throughout the middle of the day and it might have been sitting at 250,000 shares traded, and there's a slow increase in terms of the volume, but also the price action in terms of the stock either going up or going down within that moment, which always attracts other people because somebody's scanner may go off that the stock moved over 3%, 5% move, because the scanners are so unique that you can set them to a lot of the parameters to your tailoring, right? So in that moment, it brought up a few new people in. And that could be still a good opportunity to take a trade, based upon, that the interest is building more or less than it becomes a level of just relative that this stock always produced this level of volume, if that makes sense, right? Meaning it was a creeper, it was a sleeper, and then it got attention, and now the stock is up and moving. And if you was able to kind of get in right before that that volume start increasing, be it for whatever value up or down, that could be a good price trade. And again, I used to be very, and I still am, but when I would really trade a lot of penny stock, that was my thing. Like I was like the dip by king. Right? You used to call me a dip by fish. I was a good cat fisherman. Always catch them near the bottom, right? Because at that time, only way I was trading was just long to the upside. I was a perma bull, so to speak, permanent bull. Only trade one way up. Right? That's before I got into option trading and shorting and all that. All right, but either way, I had to do with what my skill set was allowing me to be able to trade under. So I just got good at learning how to read the bottom, how to read the volume, how to understand the relation to the catalyst and investor sentiment, right? How to go into the Fly or biotech breakout.com or whatever these little sites that have these different values of screening stocks and giving information about them that you want to that may have a foreseeable future date that they may get some kind of level of news and this, that, and third. So you start front loading the stock, right? Based upon it having shown some good favorability, of entry based upon the setup, right? Be it, let's say, low RSI, oversold, the 9 and the 20 EMA starting to kind of converge a little bit before you had that level of divergence, right? That squeeze from any kind of new volume coming in, right? Again, looking at the the previous chart history from 30 days, 6 months, 52 weeks, all these things started to matter. Earnings reports. I just started mixing that melting pot together, and then it all began to make sense to me in a lot of ways of how to again front load a stock. Case in point, real quick, I hate to get off topic, but the stock SQM, right? It's a lithium play, right? We know that lithium is a high demand right now because everybody's trying to go EV, meaning electrical vehicles. We know about Tesla, we know about NIO, we know about Energize, the battery company, right? The lithium batteries, right? It's a big movement for lithium right now, right? Interesting enough, I know as far as me, being honest, I really wasn't thinking about lithium back in the days, right? Because, who would think about lithium, even though it was like a sign of revolutionary technology that you need to start probably focusing on lithium play, because these are the components that make up these other big major innovations and inventions in terms of electrical vehicle. Well, what powers them? It ain't corn, water, and urine. I can tell you that, right? Right. We ain't got there yet. So again, batteries. Okay, but what kind of batteries? Solar cell value is it a charged, positive and negative ion based lithium battery, whatever, But we find out these are a lot of lithium based, hardware based used items. Right? They're using lithium basically, right? So when you think about lithium in the value to gold, right? Well, we know gold is a store of value, same way how Bitcoin is, so to speak, right? Just in case fiat currency ever default, everybody gonna go back to gold, right? We know that's the industry standard, right? But in terms of demand value for emerging markets or evolutionary inventions and technology, of people that are using these different things to build up their infrastructure, right? To get from a quote unquote, I hate to use the terminology, from a third world country to a new age world, and they're going and using all these different new inventions and things that people are already innovating out there. Lithium and solar panels is kind of like on high demand, right? So again, Tesla can barely get its production up because it's having issue with the battery, all right? The Asians, to be exact, the Chinese are buying lithium at crazy rates right now, to the point where they actually are in control of the two biggest producing lithium deposits literally on the planet. The Asians got majority of the, in my mind, majority of the state ownership in the biggest lithium producing mines on the planet. How did they get there? How did they find a way to do that? Right? How did they get ahead of the game before everybody else to control a lot of the industry values where they can be the facilitator of these products, this product or resource, to be able to sell it to Teslas and the Neos and the Energizer batteries and this, that, and the third, right? Somebody did their due diligence. Somebody did their homework, right? Somebody understood that this would be a very high commodity at some point. So again, long story short, this company SQM, I've been speaking about it for the last couple of weeks, right? It had an earnings report about a couple of weeks ago. It didn't do too well. It did okay. It could have done better, but they had a high production of demand, and they were able to meet that demand, right? So they tried to go over and above what they were able to do, and that's how they came in short in numbers. So I was like, okay, well, this is a good bottom buy. When I looked at the chart, the stock was sitting at near a 52-week low value, around about $39 a share. I got in roughly around about 42, a little 42 and change. I said, here's a good opportunity to buy, because right now, the demand for lithium is going through the roof. Everybody I turn around, people saying lithium, they need lithium. Lithium, you keep hearing about Tesla, you keep hearing about, all these other companies that are looking for batteries now, lithium powered batteries, to make another alternative resource to fossil fuels, right? No one wants to burn coals and dig up, fossil fuel in terms of petroleum to be able to, heat or light up their homes, this, that, and the third, right? And it's much more cleaner to use lithium than burn fossil fuel. Again, I just put two and two together. Again, I'm going somewhere with this, so bear with me. So either way, in that moment, I was able to, again, do the same level of diligence to realize how to apply an opportunity in the demand value from a volume perspective, because again, their volume increased. This stock volume increased, not necessarily from the trading volume, but its demand volume for the value of its product and service. The same thing. So at some point when it started becoming more of a ubiquitous, topic to talk about, lithium, well, guess what? I'm already in. Right. So again, I was waiting on some favorable news for this particular company, because there was, they're looking to ramp up their production. Number one, the analysts are getting very bullish about this whole sector as a whole. Number three, this one particular one in relation to its competitor, ALB, they was in talks of getting a new, stakeholder, and the Chinese come on to buy out one of their old, big stakeholders in their business, because their contract was starting to expire, right? And they was going to move on to another company. So they actually own 23.77% of the company, and the Chinese want in on it, right? This one particular company called Tianqi, TINQI, or whatever. But either way, that brought a new level of enters into the company. High demand for lithium, looking to do pretty good on the next earnings report, based upon this level of demand. They're trying to find ways to ramp up their production so they can meet this demand, while the price of lithium is a little higher right now than the natural, standard. So again, from that increases book value, right? That increases the book value. So again, the deal, they had an auction that they were trying to auction off their share stake in this company called NTR Nutrient to this new company called Tianqi, that's a Chinese company, so they can own a more controlling stake in the SQM, which is the biggest lithium deposit on the planet, is in Chile. Chile, South America, has the biggest lithium deposit on the planet. The biggest lithium deposit on the planet is in Chile, South America. And guess who runs that particular location and has the biggest stake in that area for that particular resource? SQM. Go figure. Right? They have the world's biggest lithium deposit under their command. And everybody went in on it silently because, again, they're trying to front load. Right? This stock all-time high was no more than 50 some odd dollars, $60. And then right now it's sitting at, again, they had a big spike in news today because of that auction that actually was today. They had a calendar for today. And the stock was trading at around like $44 a share when it closed for market last Friday. Before it opened up today with that deal, the stock gapped up to like $46 off that news of this auction for their new shares to be bought by the Chinese company. I had the $45 calls and the $47 calls I bought 2 weeks ago in lieu of this, just for this very day. And I have the December 21st expiration on it. So again, y'all can see where I'm going with this. That's front loading. That's expecting abnormal volume to come in. Today it had abnormal volume. Today it had abnormal volume. Price action volume, and also, obviously to meet that demand, it came in. So real quick, let's run over here and see it real quick, right? Oh, my little thing went off. Okay, no worries. All right, so let's go right over here, right? Let's go to, and I'm gonna go back to the alpha predator again. But again, we're going somewhere with this. There's a method to our madness, so to speak, and how we train. There's a method to our madness here. All right, so let's go over here to SQM. Right? And I can go to other stocks like FinViz and all that. You can see what I'm talking about, but just on the day, so you guys see what I'm saying. All right, this was the move that it made today, guys. It was trading at $43.98 last Friday. This move right here was a gap up. Look at that gap up. It wasn't a just buy. It just gapped up to like $46 and change. You guys can see this clearly here. Off that news of that new company having that big stake in the company, meaning it bought the old shares from another company. They bought it at a premium too. They bought it for $65 a share. Came out to like $4.01 billion stake in this company because they want to be the holders of this industry when it really begins to take off. This Chinese company called Tianqi want to be a major player and distributor of this lithium. So again, this is a long-term investment for them, to the tune that they shelled out $4 billion. And looking at this gap up here from 38, it gapped up, went all the way up to like $46 in the pre-market. Pull back, channeled out about 45, 41, which is natural. Again, profit taking. And then guess what? Decline began. Decline began. Decline began. Obviously, not only my $45 calls were deep in the money, my $47 calls also got activated today. They got activated as well today. Excuse me. Let me pull it back some. Okay. They got activated today as well, right here. Stock went up above, $47.78 today. I think $47.07 on the high today. Right? So I had 4 of them, 2 of the 45s and 2 of the 47s. So again, abnormal volume. Abnormal volume. Now today, it's traded over what? 1.3 million shares on the day. 1.3 million shares on the day. Basically about 1.4 million shares traded on the day. Right? So real quick, let's go over here. Right? 1 second here. All right, so let's go to FinViz, so we can see what we're talking about in terms of abnormal volume. Again, this is another way to kind of chart for that level of volume. Now, one thing I love about FinViz, because it gives you a lot of that kind of that kind of analysis, right? Top gainers, this, that, and the third, new high, right? Overbought, right? Unusual volume. Here we go, unusual volume. So just talking about that again, Brother David and the rest of everybody that's paying attention here. Well, guess what? Look at the ones who had unusual volume today, right? AETI, that was all over everybody's scanner today. ATOS, right? ATOS, abnormal volume today, right? EWRI, abnormal volume today. SEII, again, abnormal volume today, right? You come over here, you got what? Your most volatile, right? Stock all over the place, right? Dropping hard or going up hard, right? Oversold. Some oversold plays right here, right? Maybe you start looking at this for front loading position. They got in particular news coming out the pipeline, right? Are they kind of left for dead in this moment and they needing some kind of level of new volume to come in, right? So go look at these oversold signals on the daily, right? Come on, thing, get out of here. Hold up. I hate when they do the advertisement. That's what happened when you don't have the paid service, right? I used to have it. I got rid of all that stuff. Now I know how to fish now a little bit better. I guess I'm being cheap. But guess what? HX oversold. RWLK oversold. WFT oversold, right? SEI oversold, right? ARDM oversold. LMBI oversold, right? But BGCP, we've been shorting actually this stock here. And one of the Discord rooms, matter of fact, over Gordon, you know what I'm talking about. Yeah, man, we were trading this stock in our other little Discord room, BGCP, right? Highly oversold. Look where it gapped down from $10.50 all the way down to $6.50. It actually was on my scanner today to short. I didn't even short it because I was too busy over there shorting APHA. Right behind this, Fugazi News, right? This one here was another one I could have shorted, made good money off of. Look how much it gapped down, right? You talk about $4, gap down value from oversold value from this, before it all, got ugly and went downhill on them, right? So great opportunity there, great opportunity here, for pretty much a counter reversal to the upside. And keep in mind, all this stuff is on the backdrop of what? This whole market catalyst off this G20 summit where everything else went skyrocketed to the moon. Everything was just running like crazy. All this old hype built inflated news. Everything except what? BGCP and GV and ARDO and HX and WLT. Y'all see it? All right? Because the strength of their level of the sell-off, again, their fundamentals does not equate to what? Just a feeding frenzy start happening for them just because everybody else running. There's no sympathy for a regular stock. I'm sorry. I'm not going to put a Band-Aid on a level 3 oil leak. For some of my military people out there know what a level 3 oil leak is, right? That is more than a drip at that point, right? You can't put a Band-Aid on that. I'm sorry. You need more than duct tape too, possibly. So these stocks are dripping like, level 3 oil leaks at this point. So even overall market favorability isn't enough to kind of help these stocks. But at some point, they're going to bottom out and they're going to bounce. They just looking for any kind of notable catalyst here off the oversold level. Look at OCN, another one we done traded before. CGIX, another one we done traded before. STON, right? BBW, right? MBOT, right? They traded MBOT plenty of times in the past. SNNS, right? NAO, excuse me. IPCI, right? MARPS, another, right? And RYB, right? Education. So I actually know this company here. This is a Chinese company that deals with education, early childhood education. They actually had a bad scandal last year behind some old child abuse scandals that rocked their company really bad, it rocked their company really bad, right? And again, they're trying to find ways to save face and get back in the game. Look at that, look at that, look at that gap down. We're trading that down, right? FRAN, another one I traded before, Fran. So again, all these are just viable opportunities, oversold plays that in any moment, if they get any kind of good news or a good catalyst value to kind of rebound or restructuring, whatever that may be happening, you guys can kind of get in on, especially if they're in a major sector or industry that's very favorable, and they may be the loser or the laggard in that sector. But at some point, if the news is good or one particular player in the industry really kicks it off, it can really help them get out of these oversold situations here, right? So again, just another way to look at it. So this is FinViz, guys. You guys pretty much got this here. I'm gonna post it in the back chat just on GP. All right, just on GP. Make sure this is the one here, or is it this one? All right, dog. I hope I ain't close this thing. Hold up. That thing running slow. Oh no, that was it. Sorry, wrong one. All right, let me go back. I got all this stuff running. I hope this thing didn't close. Okay, there we go. So let me post this in the back chat, guys. So you guys probably already know about FinViz. I'm pretty sure you do. All right, but this is just oversold. The oversold tab within that. That particular section. All right. So again, real quick, let's go back to the start we was talking about real fast, right? So we can move on. All right. So far, is everything going good? Pretty much, guys. Everything is solid for you guys. You guys can hear me clearly. Is the information coming through pretty much solid and comprehensible? From a place where you guys can comprehend it. I know I'm just making up stuff as I go here in terms of my diction, right? But again, you guys know what I'm saying. Hold up 1 second, let me clear that out. Okay, here we go. All right. So when we're talking about average volume, right? Again, average volume, here we go. Right? Now, on average, and this is probably the weighted average volume over the past month, past week, whatever it is. It's a weighted algorithm of volume rating based upon day over day. So as of this point, from an annual perspective or whatever, the average volume is rated at about 808,000 shares traded. Average volume on SQM. Today, it had how much volume? 1.4 million, right? 1.4 million, right? And increase almost what 30+%. Extra volume today, which is huge. For a stock that's only trading at what 108,000 shares on the daily, right? And the RSI proved to be kind of what very viable, because you're looking at the RSI here, it's sitting at a 60, and that's just up to today. Now before that, the RSI was sitting at probably around about 40 something. But today it's up to 60 on the RSI, on the relative sliding index. So guess what that means? Guess what that means? That means there's still more room in this thing, to keep moving. There's still more room in it to kind of keep moving to the upside. Based upon this good news. So look at the gap up. See right here where we gapped up? And look at the chart here. You see right here? What do you see right there? What do you guys see right here on this pattern here? You guys can see that clearly? Right? We're talking about alpha predators here, right? We're talking about abnormal volume, right? Let's go there. So what do you see on the chart? What kind of pattern is this right here, guys? Somebody throw that in the back chat. What pattern do you see here? You guys tell me, what pattern do you see here? You see a bottom there? You see one here? You see one here? What pattern is that? Are you David Jones saying triple bottom? All right. Kind of close. Yeah, you kind of close there, brother Davey. Actually, it's even more defined actually than that of a triple bottom, actually, to a degree. So you see a long point right here. This is the biggest pivot right here, right? If the biggest pivot is higher than is two other leveling crest, what do you see? There you go. Overgrowing. You got it, right? Oh, yep, you got it right, King David. Right, inverted head and shoulders. Inverse head and shoulder, 100% right. And the inverse head and shoulders is what kind of pattern? Trend, is it bullish or is it bearish? Right? Is it bullish or is it bearish? Right? I know it's kind of a elementary question, but it matters, because again, we are in the business of what? Understanding how to be fluent and, you know, the nomenclature of things that we kind of itemize, but more important, the verbiage we use, right? Because again, it becomes a part of what? Repetition, which also increases your what? Your knowledge value, right? So it's bullish, 100% right. Inverted head and shoulders makes it bullish. And look at where the stock came from, right? On this trend here, right? How it was kind of what? Sloping down a little bit off this kind of what? This 52-week high up here, right? Up here around like $59 almost, like $59 here, right? Since then, broke down, hit some key level supports on the way down, presenting those what? Lower highs, right? Lower highs, right? Lower highs, right? And then it hit a point of what? It started balancing out, right? It started balancing out. Even though we got some lower highs down here too, but you seen a strength value where, again, right here, it showed that they want to get back up there and test some levels of resistance, as you see right here on this level here, around about $49 here, somewhere around there, give or take. The same way again, what? Right here. So previous chart hits have said a lot about this trade here that made it a very favorable what? Bottom or dip buy. Which one of the reasons why I bought what? I bought in what? Down here. I bought in at $42 and like what? 42. I got in at 42. I got in at 40. No, it was like, was it 42.30 something? Yeah, I bought in like 42.30, 42.21, if I'm not mistaken. That's when I bought in this stock. Because the chart just showed everything to me. And knowing that it was going into earnings and knowing that they were waiting on this news to come out about this, you know, this company want to buy, you know, a good favorable stake in, you know, in this mine, right? And knowing that lithium is a high demand because of everything we've been hearing about Tesla, the world over is now trying to move away from what? Fossil fuels and go to more clean, renewable fuel. And knowing that Asia is the biggest market share value or buyer or consumer for this new technology because they need it more than anybody for the value that they have in environmental pollution at rates that no one can withstand in the, you know, outside of, you know, their country because, you know, their region because it's so polluted there. Again, it's a big demand for it basically at the end of the day. Again, 2 + 2 has to equal 4 here. It just made sense that this was a good opportunity. And this company's major competitor is a company called ALB. These are the 2 biggest lithium plays on the planet. That means it's in a small sector in terms of competitive value where there's enough to go around for both of them. So it's not having to fight with, you know, 5, 6, 7, 8 different companies kind of what to be relevant for share value, for market share value. You see what I'm saying? Again, alpha predators, right? Based upon volume, demands, and all these things of that nature, technical and also what? Fundamentals. Are you guys following me here? Are you guys following me here? See where we're going here, right? So again, I got my what? My payout today because I waited on this news. Took no more than about 2 weeks, so that's not bad. That's not bad. That's a good investment. I bought it right near the bottom, going to its earnings on that news that it was waiting on this, that, and the third. I bought the $45 calls. I should have bought the 44s. I was being cheap. But I bought the $45 calls and I bought the 47s, 2 of each. And here we are now back at a key level on this trend here, right? Hitting the key level of resistance at that $47 mark. That's why I hit 47.07 today and pulled back there because guess what? Look at the trend line, right? Look at the trend line, right? Look at this, what? The support level here, right? The trend line and the regular support level showing what? Major resistance there. But if it cracks that and gets above that, and we get above this 200 moving average, which is at what? $48, hey, it can be lights on. It can be game on. Has a gap to fill up to 50. Look at that gap there. Has a gap to fill to 50. After that, it could just ride on. It could just ride on out. You know, based upon this level of demand, based upon the fact that it has, you know, that the volume is starting to pick up because guess what? This is the first day of us having this kind of volume since they what? Put out, I think, their earnings. The volume had decreased. All right, so again, let's run over here to quote media. Let's see exactly what I'm talking about here. Yeah, talking about alpha predators, right? Let's go there. All right, let's go there. All right, so SQM, right? Go right over here hold up. Let me go to hold up. It is, where is that P ratio, corporate history? Nope. Is it key ratio? I think it's key ratio. Let me see. Yeah. Key ratios. All right. So again, so okay, real quick. So again, held pretty good, decent on this earnings. Excuse me, on this gains on the day. Picked up 5.52%. Obviously, you know, had a high today of like 47.07. After hours, you see where it's at. You know what I'm saying? Only gave back 4 cents so far after hours, which is pretty good. So I mean, it's holding its what? Holding its own after hours. And it traded about 138,000 shares after hours, which is really abnormal. If it was only trading at what? 800,000 on the daily, you know, after hour volume, after hour volume would probably be around about what, 30,000, somewhere around there, had it not had this kind of what, catalyst on the day. Alpha Predator. All right. All right. So let's go there. All right. So this is all the technical stuff, fundamentals. Y'all can go look all that stuff up, but I'm trying to go to something that's very important here. All right. I'm trying to go to something that's very important here. Where is the, hold up, that's not the one. I need to go to, what is that? Commodities features, key ratios, analyst recommendation. Hold up, where is that? I used to know this thing like the back of my head. What's wrong with me? Option chain, most active options. We can look at that too as well, real quick. I mean, I know it's, want to make sure I value you guys' time. I want to hold you up. But let's see here. Change. Okay, yeah. So again, you can see right here as well, right? Look at the volume. Look at the option volume, right? Look at this option volume for a stock that was on trade at 800,000 shares. 345 contracts is a lot for a stock that was trading at only what? 800,000 shares traded on average at that point. And it was at for the what? There's $47 what? Strike prices. That same 47, that's why I bought 2 of them there, and I bought 2 at the 45s, right? Look at that volume. And all these are December 21st expirations, right? I got in when it was at what, like 60 or 50 some cents a contract. Look where it's at now. I think, yeah, I got in at what, 40 or 50 some cents. I have to go pull it up. I got in like real early though, basically. Look where it's at now, up in there 90 and $1.30 a contract, for that, for the value now, for the $47 calls. Obviously not because it's way up there, but still, right? You see what I'm saying here, right? So the put volume is not comparative to the what? To the call volume. But if you go look at the strike prices for the put volume, where is it allocated at? A lot of it is allocated into what? Way next year. 4/18/2019. January 18, 2019, right? Stuff like that. $40 calls. I'm just giving puts, $47 puts, $45 puts. But all of them around that same what? Strike price that we're looking for on what? On the bullish side. All this is relevant. All this is very relative too. You see what I'm saying? So again, the volume on the call side outweighs that of the what? The put side. Liken that to a favorable catalyst or something of that nature where there's strength and you got a what? A favorable trade. An alpha predator, so to speak, in a lot of ways because of where it came from. Does that make sense, guys? And if you don't believe in it, I'm going to show you real quick here. Let's do RH real quick, restoration hardware, right? Let's do this one real quick. In terms of that same option value, right? And this is why I also took restoration hardware long into earnings. This is exactly why I took it long into earnings, right? So real quick here, and I'll probably go put up on black box to be more discreet. Look at the call volume in relation to the put volume. You guys can see that clearly, right? Look at that call volume, right, in relation to the put volume. Right, let me squeeze it down one section. Okay, look at that there. And guess what? A lot of people bought the 170 strike prices for the December 21st expiration, right? Look how much of the volume, the contracts out there, 3,678 guys. And look at the price. The price of like 30 cents a contract. 30 cents. And they went and bought those things up like running water. Now, interesting. Now, let me show you something. Look at the 125 contracts. Look what people had to pay for those contracts today. If they want to buy the 125 contracts going into earnings for today, Look how much the difference in price. Obviously, that's a lot of money away from 170. I get it, but you talk about $1,110 a contract. You know, $1,200 a contract. If you bought the 125 calls today, going into earnings, and there was 2,061 contracts of those bought today. And the 115s, right? I don't know if they were bought today or, you know, that's just a cumulative. I take that back. That's a cumulative of what was bought, you know, for that. You know, actually, that's the 2019 contract, excuse me, for the expiration. So people front loading basically. They were front loading. But yet, still, you know, they still pay the premium for those contracts. Again, January the 18th, same way, 2,000 of those for the 115s. Somebody bought, they bought the 150. This week expiration date, right? The 150 bought the 150s. Here we go. This is what we want to look at here. Look here. So this is for this week expiration. For the 150, what? Strike price. Look at that. Look at that. Them contracts about $1.30 a contract. $1.50. And that means they went up throughout the day because the stock actually picked up some gains throughout the day off this whole, you know, G20 summit. So they probably trading at about 70 cents a contract, probably around about 60 cents to 70 some cents a contract when the market opened up. And it went up as high as what, $1.35 before the market closed down, the option market. But 1,000 of those contracts in play today. You see what I'm saying? Alpha predators. I saw that. I was looking at that throughout the day. I was looking at that throughout the day. Right? Call volume, you know. So this is why, you know, when I you know, did that up against the value of the put volume, obviously it's just one aspect of the trade, but when I did that, you know, that compare and contrast, and then I went and seen, you know, the fundamentals a little bit. I saw that they had some acquisitions. I saw that they kind of, you know, fixed some of the issues they had on the Q2 report a little bit. And the analysts were like very bullish on the stock, you know. So I was like, okay, man, the analysts even fired about this stock. Let's go see what they were talking about. So I went over there and said, let me go see what the analysts are talking about, right? And I checked several different sites. I don't just use one. And this is tip ranks. I use tip ranks a lot too. Again, I use the free version. You don't have to buy it. So you got a lot of people aggressively bullish on the stock. The last earnings updates were around about 3 months ago, pretty much the last quarter, right? Reiterated, upgrade, reiterated, assign, reiterated. People saying hold or buy, basically. $155 price target going into next year, over the next 12 months. Those are just projections. A low of what? 135. Stock was already trading below 135 going into earnings. It was down there like 110, 115, bounced, got around about 121 today, 122 up into the close, made for a favorable bullish stance that these people trying to really break out of this this funk that it was in off the last report, right? It was a breakout time, right? It was breakout time, and there we go towards that, you know, that earnings report the last earnings, right? It gapped down, right? It gapped down. It went from here to down here, right? And I remember playing it too. That's why I knew about it, all right? But either way, again, here you are today. Again, it's just showing us some favorable opportunity here. So I went and looked at that, looked at the book value, whatever. Long story short, I bought it long in the earnings. I only bought like 150 shares because it's a super expensive stock. But that stock up right now like $4,000, $4,000 or $5,000 on that trade right now. Trade cost me about what 20,000, somewhere around there. 16, 20,000, like that. Leverage account, obviously. And that trade is up now about $4,000. So 150 shares brought about $4,000, $5,000 in value off that earnings play. Because again, you know, that kind of abnormal, that kind of stuff we just been talking about, you know, alpha predators and all this, that, and the third, relative value, relative strength value as well. Meaning, you know, where's it at in terms of its, you know, restructuring and growth and this, that, the third, coming off some daily lows. And interesting enough, right? We just looked at the SQM chart, right? We just looked at that one as well, right? Now let me show you something. Look at the chart here on Restoration Hardware. Is that not like the same chart we just saw on SQM? I rest my case, Your Honor. I rest my case, Your Honor. Is that not the same inverse head and shoulders, inverted head and shoulder pattern? Is that not the same going into earnings? and it broke out some key levels of what? Resistance. It crossed over the what? It crossed over the what? Y'all see that there? It crossed over the 200 moving average. That's a bullish signal, right? Anytime a stock breaks above its 200 moving average, after they sold off underneath it a few times, that's a bullish signal. That's a bullish signal. That's all I need to see. It crossed over the 200. I said, oh, it's game time. All right, I got long on the stock around about what, 121, something like that. 121, 122, right into the close. It closed up around what, 123.65. Crossed over the 20-day moving average, right? Crossed over the 50-day moving average. It's game on. Broke the trend line, got above the trend line, right? This down incline trend line right here, got above that. Another bullish signal. This stock was just screaming bullish signals. It was screaming bullish signals. Look at it. Look at the chart. You know? So again, a lot of what key determining factors would make me what? Be very aggressive. Not necessarily a sure side, but aggressive in my confidence to take this stock along in the earnings. I had the ability to risk that value 150 shares, you know, plus minus ratio of a couple $1,000, you know, for this opportunity to be to catch this bullish aggressive move to the upside to kind of get out of this inverted head and shoulder to kind of come back and close this gap. It has a big gap to fill. Look at the gap. Remember that last earnings? You know, somewhere around there, it pulled back up again. It had a gap down here too. Look at that gap down. Right? Bad news. Something happened that time. I think I remember something like happened, but bad news. Right? And guess what? The stock trading right now after hours at $149 a share. It's trading. It's way back up here. Pretty much, it filled that gap. It's filling in that gap there from the last major gap down. Could easily find itself tomorrow trade up here near 160. If it gets above 150 with strength, especially if the market's kind of bullish market, easily find itself up there near that 55, 160 level. Easily. Another home run trade. Another home run trade. I mean, if I don't trade nothing else tomorrow, that's all I need to just focus on my RH trade that I longed in the earnings. And I'm mad again that I wasn't able to get my calls filled because I was trying to buy some calls as well. True story. Now imagine if I got my calls filled as well on the option market. You know, again, that's why we trade, though. That's why we day trade. This is why we study. You guys get where I'm going with this. A lot of it, you know, isn't so complicated once we start realizing how to put two and two together, what to look for, right? Again, so how to build a watch list, so to speak, how to find these stocks, right? Well, we just went through a few different portals on how to find oversold stocks are being bought, you know, beat up and left for dead, this, that, and the third, right? Screeners and scanners that are talking about these certain stocks. We know that Restoration Hardware, obviously, it was plastered all over you know, things like stock twist, this, that, and the third, you know. So again, we say, well, hey, if that's the case, hold on, let me see this thing. Hold on, this is raggedy. It must be dead. Okay, whatever. Let me see if this thing running. All right, so real quick. So again, we going over again how to find these trades, right? So let's go to Restoration Hardware. All right, so now again, I'm always playing a lot of earning plays, right? It's no secret. I play a lot of earning plays. Y'all see why now, right? So real quick, I was looking at the earnings calendar for this week, last week. I was looking at that about a week ago, sometime 2 weeks ago. If you don't believe it, that's why you see I got my tabs up, my strike two zone. This is my strike zone of stocks I'm looking at throughout the day, or publications and site. Some of them I take out, some of them I leave on. But you know, again, you know, I'm working. All right, when it's game mode, it's game time. I'm working. All right, so guess what? I was into this week's earning plays from last week, front loading the idea what I want to trade. Right? You got AutoZone tomorrow. You got Dollar General tomorrow. I mean, it's a lot of stocks, but again, you guys get my point here. All right, so today, again, what do we have? RH, right? Now, they even though they didn't drop their numbers, right? So it's after the fact now. But before that, you know, it had, you know, beat, meet, miss, or whatever the case like that. It had the technical fundamentals of what people were looking for, right? I went and looked at, you know, because I've traded this one in the past, right? This is a usual suspect, as they call a usual suspect. Since I traded in the past, I had a little more familiarity with it, right? So I was already saying, okay, let me look at Restoration Hardware because I'm, you know, hey, you know, we might get some action here, right? because it was, it got beat up last time. It came off a big gap down. The stock was kind of bottom out around some key levels of support. It held a little bit. I started seeing the inverted head and shoulder, same thing y'all just saw, right? And then again, the end result was what? They had the guys going into this quarter was actually lowered a little bit, but they held it pretty strongly. Right? They didn't have to, pretty much have any kind of lowered guidances, going into the earnings. So everybody kind of held their own. And look at the numbers. Look at the numbers, right? Consensus, the earning whisper consensus was what? $1.33 per share. Wall Street was saying $1.27. They produced $1.73. Blew it out of the water because nobody had lowered it. They had lowered it so much come out of the last earnings, and they had a big gap down back in September. They had to come in what? Conservative. I love when they come in conservative, and it's had the opportunity to prove itself to be a major player to get that into that kind of best of breed mentality, right? So guess what? The estimate for this earning was what? 637 million, right? And then what? They reported what? 636,000,046. So they missed on that just by a small increment, 0.2%. But what shareholders get excited about, they can accept that. But the two things that make this thing really squeeze were what? They raised their guidance going into what? The next quarter. That means they're going to look for a higher share value for their investors going into the next quarter. And look at how much they beat on the earnings per share. That's over 40 cents. That is a lot of money for $140 stock, $120 stock. That is a lot of money that goes back to the shareholders. You see what I'm saying? So again, the growth value earnings per share 30%. Earnings growth value down a little bit, not a lot, but guess what? Revenue growth up by 7.4%. We can dig into the specifics, obviously, in detail, but either way, it was enough to drive this stock what? Higher. Because it was left for what? For day and the chart setup made it for a great what? A breakout. Because it got above the 200 moving average, it got above the 20-day moving average, and it got above the 50-day moving average, and it got above the trend line. It was just primed to break out. And now it's above what? All those channels and levels of resistance. Right? You say, so do you do all your due diligence based on who's reported earnings? Well, not just that. Again, I'm always constantly looking at the market as a whole to kind of find something that's worthy to play, to trade, basically. Again, we just talk about that. What are you looking for? What are some of your key, metrics that you kind of go into when you're looking for what? To trade some of these stocks. You see what I'm saying? So again, that's important, right? So again, let's go back to our daily lesson, right? So it's saying, okay, so let's go back to Apple, right? This whole scenario towards what? Alpha predators, right? Right? Pretty much what? How to find stocks to trade for trades, right? So again, going back where we left off there, say take a look at Apple, right? Daily chart for 2016, we just whatever. You can see that there was what? Only 2 days that had high relative activity, right? Those 2 days, right? And this is almost, if you look at the time span here, let's say, mid of May to pretty much what, near the end of August. You're talking about what, about 3 months, right? Basically. But out of those 3 months, the biggest volume days came in on what? This hindsight, obviously, but that day, even if you were looking at it from that perspective, you came in like the day before this big volume day, and look what the volume was the day before. About a third or half of that, or what it was, or what this volume came in on that daily. And basically, if you're that really much of a technical trader, soon as you saw that volume eclipse the previous day volume value, that's when you would have got excited about the stock. I mean, I know people that trade that intricate level. That's what I love about trading, because it depends on how disciplined and how hungry you are to be the most knowledgeable trader out there, to be able to catch all these little key cookie crumbs to kind of give you the indication where it's going to lead you, right? We all trying to get to the gingerbread house, right? Right? There's breadcrumbs and cookie crumbs and candy all over the path in the forest, right? How well we follow those crumb trails that will lead us to what? A particular a bigger pot, a bigger profit. Or do we just eat a few of the crumbs along the street and get full and just give up and say, no, I'm good, right? I'm good where I'm at. You see what I'm saying? You see where I'm going with that, right? So again, it depends on the trader. It depends on you guys. It depends on your level of attention to detail. I'm a stickler for attention to detail. And that was before I went into the military. I have a stickler for attention to detail. I know when it matters to these kind of things, especially professional-based things. This is my profession, so I take it serious. It's no different if I was, at a Fortune 500 company, right, working in corporate America. I don't care if I was slinging burgers down to McDonald's. Attention to detail matters. It says a lot about your integrity when you take things to the point where you want to give it your best. You don't want to slack yourself, right? That's the difference between most traders. That's the difference between most traders right there. I guarantee it's the psychological edge that some traders have over others based upon their level of what? Uphold a standard or hold themselves accountable more or less than just saying to say, I'm gonna put that blame off on somebody else. No, we are in control in more ways than we like to give ourselves credit for or take responsibility for. So when it requires us to go a little extra, do a little extra to study a little longer, that's on us. Right? It falls back on us when we hit that buy button. It falls back on us when we hit that sell button. No one forced you to take a trade. No one forced you to sell your assets. Despite what the public opinion or consensus is, you still have to make the type of decisions based upon your comfort level by understanding the lay of the land, knowing what to look for, what not to waste your time in. Again, so you can find yourself in a good position. You see what I'm saying? So again, I just want touch on that because I know you guys are getting. You guys are like crazy smart, right? You guys are super smart, all right? But that's why this what we're doing here in terms of this session, these mentoring sessions, we're trying to unlock that. We're trying to extract that which you already harnessed inside of you. Again, I'm just a facilitator, an extractor, so to speak, right? Right? I'm just the so-called the surgeon at the moment. Everything that you have to be successful at this, in this craft or this field or this industry is already inside of you. And you either, have to want it or you just kind of constantly still just kind of figuring it out as you go. That's what separates good trader from average trader. Your growth level, your linear, what they call algorithmic, growth curvature value, meaning your growth, data plots to show you here, where you start to where you're going, has to constantly be able to even kill to the upside. Constantly. Because you're constantly trying to improve. You're constantly you didn't hit that point where you didn't hit that firewall, you didn't hit your resistance, you just like, no, I don't want to study anymore. No, I don't need any more new knowledge. No, I'm good with what I got. Again, myopic minded. That's when everything started to unravel and spiral down, down from there. Because you lose your passion to want to get better. I'm not saying that's what our case is on here, but again, in that moment, if you find yourself having that kind of thought, recollect yourself. Take a day or two off from the market. Go enjoy yourself. Find things that you love to do more than anything that gives you the best feeling that you ever have, and focus on those things to rekindle your love and passion for self. Because you have to respect and love yourself enough to want to put in the time to put yourself in the best position to be successful. And if you don't feel good about yourself, you won't do that about anything else, so to speak. As they say in the military, you're half-aid. You're gonna sham your way through it, so to speak, right? Right. We don't want to be that, because guess what? Money's on the line here. Our hard-earned dollars are on the line. We do not have a luxury to have a luxury in this market. But you take a trade or you don't, there's no days taking off in this industry, because the news is constantly revolving. Opportunities are constantly presenting themselves. Whether you trade or you don't, just knowing the fact that you got unlimited opportunity at your disposal, that in itself should be enough to get you motivated. When we know a lot of our peers and co-workers are sitting on the job miserable because they only got one source of income and they don't have no other way. If anything ever was to happen at that job, or they get laid off or they cut the hours, they're going to be in a world of hurt. But not you, not I. We have things that we can fall back on. One of the most lucrative opportunities on the planet is an investor trader, because you have unlimited access to liquid opportunity from the comfort of your own home, on the beach, on a date, at the kids' reciter. I hope you ain't trading the kids' reciter. Your baby up there playing, you trying to trade. You're like, hold up 1 minute, hold up, little Susan, let me get this trade in real quick, hold up. But y'all get my point. But again, that's that freedom. That's the freedom, right? So again, let's close out this little part here. So again, they mark what? They mark the arrows on the chart, basically what most notable days they had out this particular 3-month session where Apple had abnormal volume, right? Right. So interestingly enough, when you take a close look at the chart, you realize that on those days the stock gapped up or gapped down. There we go. Talk about them gap downs, gap ups. We just looked at that on the what? The SQM chart. We just looked at that on the what? On that what? That RH chart, restoration hardware. Isn't that surprising? Isn't that surprising? Typically it's not if you're already used to it, but you get my point. That's the abnormal volume. That's short squeezing. And that's also bull squeezing. There's something called bull squeezing too. Don't get it twisted. Bulls get squeezed too. Stop loss to get triggered, the stocks gap down. What you think a gap down is? That's people getting up out the trade at a point where it's causing what? The squeeze to the downside. Matter of fact, the SPY did it today during the pre-market. After the future market opened up yesterday and it gapped up, it gapped down some today too. How about that, right? So again, I love this stuff, right? So again, it says what? I mark the price gaps in the chart. If you wanted to trade Apple, you should have what? Traded it only on those days. Meaning they talking about day trades here. They're talking strictly day trades here. For big moves over, but those are big moves. Now typically we'll still trade these stocks in between these days of high volume, but you're trading it with a tighter scale, a tighter what? Consolidation, a tighter channel. On your top side, on your bottom side, you just trade within that channel because it's only going to move so much throughout that day based upon what? The volume, price action, and the chart setup. And that's just ubiquitous across the entire market. No matter what trade you take, if it's caught in a certain relative value of volume, it's caught within a certain level of the chart, it's caught based upon in or out of a catalyst, whatever the case like that. If it's only going to give you a expected move of a certain percentage value or a certain dollar amount, and that's all it's willing to offer you, then you trade that dollar amount like a champ. Learn how to split that difference, plus minus ratio, that middle, find that middle, and play the top side and the bottom side to that. And you can scalp it all day long if you know what you're doing properly. Right? We talked about that I think 2 sessions ago. How to chart split the channel. How to play the upside and play the downside in the same manner. Especially if you can short and go long at the same time. I mean, trade, both ways. Right? So again, just going on what he's saying. So the other days were comprised of just normal high frequency algorithm trading. So again, that's some bots now. Now we're talking about the algorithmic trading. Institutional traders and the bots. The bots, because look at the volume. Here's the key indication right here to let you know that these were the bots that are trading the market. Because it's relative around the same level of volume. 21 million shares traded on average. Look at this guy. Cheat sheet moment. Sound the alarm. Cheat sheet moment. That's the bots. And regardless if they go up or down, that's just based upon retail traders in and out of the moments of when the bots are trading, because there's no key level of volume. Catalyst that's kind of causing stock to kind of go up and down. It's just kind of doing what it's normally do. It's saying at 11 o'clock we're gonna buy this many shares. They might have it set if it dips below 0.5%, buy this many shares. It's programmed that way. Interestingly enough, and it'll do that throughout the entire day. And some of them even have both of their stocks are correlated to the SPY. The Apple is a big proponent of the SPY, meaning it pretty much in itself delegates a lot of how the SPY trade on average. If Apple's having a bad day, it's going to bring down the SPY too. In some cases, in most cases, and we know Apple of late just been getting pummeled, right? A lot of downgrades. People still ain't. They say it's not even over yet for Apple. They say it's not even over yet for Apple. They talking about saying Apple 160 something. How about that? Even though it had a little $3 gain day today, doesn't mean that long term people still feeling bearish on Apple. To the tune, they're still saying the Apple about 160, 150. Crazy, right? Imagine that. Again, market sentiment, investor sentiment. That's important too. How are people feeling about these assets? Are you the only bullish person and everybody else is bearish? Chances are you're going to be in trouble. Because your little margin account, leverage account ain't enough alone to fight off all these, bearish people. You know, again, you need me to tell you that. We all been there, don't think we can move the market. Sometimes we maybe been able to, but ultimately you have to err on the side of caution and roll with the fold sometimes. Sometimes, not saying all the time, but sometimes you gotta, again, roll with the fold. Because at that point, that's where most of the momentum is at. You don't want to find yourself fighting against that unless you're just scalping for nickels and dimes. Nothing wrong with that either, as long as you're profitable. Right? So again, just kind of talk about this. So alpha practice. So retail traders should stay away from stocks that are trading normally. Meaning that not necessarily a ton of volume. Unless they know what they're doing. That's basically what they're saying. They're just saying err on the side of caution. Know what you're doing if you're going to trade these abnormal volume days where, again, it might be pushed to the upside because the bots are buying it and shorts are covering. But guess what? There's other factors within that. There's option flow chain that makes that, making that trade or that asset seem bullish because there's a lot of call volume going in. So guess what? You just ride the wave. You just ride the wave. Right? So a 2 or 3 day swing, a 4 day swing trade, if you know how to trade it right, that's what options are for. It gives you a week worth of expiration to move a certain percentage value or a certain gain value. Look at the week value. So basically 4 days of trading in Apple during this particular one when it sold off a gap down here, it pretty much closed that gap from the gap down that it happened on in 1 day. 1 to 2 days right here. Let that marinate. 2 days or basically 1 day of gap down because this was just the doji here, the Dragonfly doji that said, hey, and then whatever news accounts that came out that caused the gap down, it gap down, boom. Right? Inverted hammer, sold off all that amount there. And then 4 days after it recollected 700 level support, it picked up and closed that gap, in 4 days worth of trading. Because the volume had dissipated. After that big volume day here, they left for dead, and the option buyers came in and started buying the bottom up, the so-called proverbial dip. So that's why it would have been okay to buy, small shares and add into it on its way up until it shake you out of the trade or hit your new level of stop loss with you being in the money, or you just bought the options, mitigate your risk better by buying the options contract, and then you only have a certain amount you're willing to risk to lose. So in that moment, you just say you bought in at 92, 92.70, somewhere around there, 92.75, and you might say, oh hey, I think I like the $95 calls here, $2 up to the upside, particularly on the premium value, $2 plus. You bought those up off the bottom. You hit deep in the money on your 3rd day, right? The volume was pretty decent. Again, more than usual, but either way, the volume was there. And then boom, it went up there, gave you that signal, inverted hammer, right? You know what that means? You get the inverted hammer. What signal is that? Right? So again, you took your profit above that, you hit your strike price, you out of the trade. 4 days. All right. So again, y'all get it, but that's why it's important. So the most important characteristic of high relative volume stocks is that these stocks trade independent of what their sector or overall market are doing. Right? Let me repeat that. The most important characteristic of high relative volume stocks is that these stocks trade independent of what their sector and overall market are doing. That's why we're talking about sectors, sympathy plays, what's happening within this, its own individual industry value, right? Is it the lagger, or is it the outlier? Is it the one that's causing the volatility? This, that, and the third. So when markets is weak, right? When the market is weak, it means that the majority of stocks are selling off. Again, we just witnessed that, had we not, over the past 2-3 months. If nobody else been witnessing, we have, right? Meaning retail traders, right? So it does not matter if it is Apple, Facebook, Amazon, or Exxon. When the market is strong, the price of the majority of the stocks will be going higher. Again, a la today, because of the futures market, because this so-called, catalyst of President, Trump and Z, this whole, trade war and tariff stuff. It brought in new volume. Doesn't necessarily mean it's going to be sustainable volume, but it just means for today, off that level of that catalytic value, it brought in optimistic traders, irrational exuberance. People were just buying all kind of prices, and guess what? The market didn't roll back over. Like I said, sell the news. It rolled the spike, and then people turned it over and rolled it back down. made money both ways. If you're smart, you would make money both ways. I did it today with Cron, matter of fact, CRON. Traded it short after the spike up, then went long on it, got above like $11.75, and then went short on it again. And I'm still short right now. Gotta love this market. Gotta love this market. Opportunity, endless opportunity at our disposal. Right? So similarly, when you hear someone say the market is bear, right, or collapsing, they don't mean a specific stock. They just talking about the overall market, so to speak, because the overall market trend value is showing what? Bearish, right? They mean that the whole stock market is what? Losing its value. Again, that ain't hard to figure that out because we go right up to the SPY, the SPX, the Dow, the NASDAQ, just at the third, the Russell 2000. We can check other country indices, the FTSE, the DAX, the Nikkei, the Hang Seng, to see what everybody else is doing too. Most time, they're obviously correlated to us, our market, because we are the dominant market on the planet, right? That's important, right? So again, the same is true for specific sectors. For example, when the pharmaceutical sector is weak, it means all of the pharmaceutical companies are losing their values together, right? So how do you go and find? So what ETF would you look at if you want to look at the pharmaceutical industry, right? Or the biotech industry, right? Even though they're kind of similar, but they're somewhat the same. So somebody throw a ticker in the back chat. Let me know what tickers or ETF would you look at if you want to check the overall strength of the pharmaceutical industry. Somebody throw that in the back chat for me real quick. Just throw it back there, throw it in there real fast if you know it. Unless you guys just go dig it up. But let me see where you guys' heads at. Let's see if you know about the sector, so to speak. Like, where you gonna look for finance? Where you gonna look for consumer staples? Where you gonna look for energy and all the some of that stuff is very important to know it too, because again, you learn in the market. All right, somebody throw that ETF in the back chat real quick. What you want to look for in terms of pharmaceutical companies, right? To see the overall health of the pharmaceutical market. What ticker would you look at to get an understanding of what the pharmaceutical sector is doing? What ETF is that? Somebody throw that in the back chat if you could, please. If you're not sure, let me know. I'll post it in the back chat. Let me see where you guys at a little bit here. And I definitely know it because I traded so many biotech stocks last year, man. That used to be my thing. Pharmaceutical biotech stock, I was all over them. Oh, man. I mean, it was really good, especially trading Robinhood back then. But thank goodness for upgrades, right? Anybody got that ticker symbol? Somebody said what? XPH? All right, that's one. There's some other ones out there that's even more notable than that one. Let me see what else y'all got in there. And that's a good one too. Keep in mind, the XPH is very, very vital. All right. But the one thing about the XPH is that it don't trade at good volume. It doesn't have really good volume. And that's why I don't trade the XPH. I mean, I can look at it as a sector, to kind of take a litmus test of the sector, but it has very grainy volume. I'm like, for such a, important ETL, the volume is like. But there's some other ones out there that have actually more volume than the XPH. Anybody? All right, somebody put the FTHX. All right, there you go. Somebody said the PJP. All right. So let's see what the FTXH did in terms of that. All right, so that's another one. All right, so they picked up some little value. Actually, that was that's old. That was old. FTXX, excuse me. I don't know if that one's correlated or not at this point. I have to check it out. Let's see. Okay, you say PJP. All right, Dynamic Pharmaceuticals. All right, another one there. That was a little more expensive than what the XP. Let's see what the XPH. Again, very grainy volume. Very grainy volume. Right. But again, these, y'all nailing it though. Y'all right. Y'all looking at this. These are the ones for the pharmaceutical companies. Some of them. And then it depends on who's the holder of the ETF, determines the liquidity value too, because again they have more buying power, more clients that they're serving within that sector. But if you look at the pharmaceutical industry as a whole, most of those what? Very grainy volume. All of them what? Spotted, very grainy. And some of them are pretty expensive. You know, some of them are pretty expensive. All right. So again, that's it. But yeah, y'all own it. See, that's it. Just, you know, but that's just another way to kind of what? To dig through them and figure out, you know, who's the, you know, some of the major players. You know, who's some of the major players. Right? You know, who's capturing most of the volume share of that particular sector, right? Now, interesting enough, because we like to parallel pharmaceuticals with what? Biotech. Now, you think about biotech, biotech it'd be popping. The biotech, man, that's why I love biotech. But biotechnology, in terms of pharmaceuticals, you talk about innovative values and technology, kind of what? Innovate and also be a derivative, where pharmaceutical becomes a derivative of the biotech. So that's why biotech is obviously more viable than pharmaceuticals, if that makes sense, right? Because you're talking about what? Operations, you talk about, instruments. It's a well liquid industry in terms of all these components, right? The componentry for biotech as a whole is much more relevant and also lucrative than that of just pharmaceuticals, right? When you hear pharmaceuticals, you typically talking about what? The actual tangible what? Medicine value, so to speak, in most cases, right? But the biotech is like the instruments, the making of the pills, the making of the medicine, all of that, right? Breast cancer this, colon cancer that, lymphatic this, that, and the third. I mean, you name it. You know, contraceptives and you name it, right? So again, even more lucrative sector. All right. So again, so real quick, let's move on from there. All right. So again, this same is true for specific sector. For example, the pharmaceutical sector is weak. It means that all pharmaceutical companies are weak. How do you recognize behavior of market? Right. How do you recognize behavior of market? Index funds such as the Dow Jones Industrial Average, the S&P 500. Are usually good indicators of what the overall market is doing. That's why we always look at the Dow and the SPY, or the NASDAQ, or the Russell, right? And then we go to what? The different indices, right? An index is the actual the big boys, the Dow, the SPY, the NASDAQ, the Russell. The indices are the the subsectors, finance, pharmaceuticals, biotech, energy, consumer staples, transportation. Y'all get it. You see what I'm saying? So again, understand the indice from the index, that's also important. The strength of the overall index is relevant to the what happens down on the smaller level of the indice. Especially if most of the stocks within that particular indice make up a good portion of the index. On a weighted perspective, in terms of an ETF, the weighted aspect of the ETF is based on some of the bigger names in that particular ETF, right? So again, it says here so if the Dow Jones or the SPY is red, it means that the overall market is weak. If the Dow Jones or SPY is strong, that means the overall market is going higher. A lot happened today earlier before it turned over. The behavior of stocks that have high relative volume is independent of the overall market. Let me say that again. The behavior of stocks that have high relative volume is independent of the overall market, right? So every day, only a handful of stocks are being traded independently of their sector and the overall market. So those are those outliers again, those little anomalies, so to speak. Those gap ups and run crazy, be it with catalyst or just a pump and dump. Excuse me, but nonetheless, they're in play that day. And if you know how to find them, you can benefit from all that volume, the high flying volume. Again, how to find trades, right? How to find stocks to trade or for the trade. So again, there's a lot of different websites, publications, and things that you can go to find these trades. Again, StockTwits ain't the best for intellectual understanding, but there is some good traders on there. But one thing is for sure about StockTwits is that they have the same thing that Facebook has that make it very useful. They have trending stocks. Hello, ding, 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 ding. Trending stocks, meaning they're getting the most attention, most volume, most chatter. most retail, bantering, that's good information. Because now from there, you can go research that stock real quick, figure out all the technicals and fundamentals, and then you can decide whether or not you want to take that trade. And it doesn't require you that you had a scanner or something at that time. But you got to obviously be good at fishing and, searching and digging. But ultimately, again, when you start out, hey, what do you have to lose? Nothing. You got everything in the game. That's why knowledge is power. That's exactly why knowledge is power. Not knowing is weakness. It can set you up to be in a bad situation. Not saying that everybody got to know everything, but you get my point. If you're particular about certain interest level in something, it behooves you to put in enough of the work to figure out all the ins and outs of that reality. Especially if you're going to partake in it. You don't wake up one day and say, I'm gonna go be an NFL cornerback, right? Just off your couch, right? Not exercising a long time, this, that, and the third. You're gonna go out there and put you some pads on, talking about you finna be a cornerback. Okay, let me know how that work out. All right, no preparation, no nothing. You just strictly, a couch, a couch, what they call a couch coach, right? You coach the team from the couch. I mean, some intelligent people that can do that, but it's a whole different ball game when you actually in the game. Totally different ball game when you're actually in the game. Same way with this trading the stock market. Same way when you trade in the stock market. All right. So again, day traders trade only those stocks. Basically, every day only a handful of stocks are being traded independently of the sector and the overall market. Day traders trade only those stocks because they look they are called what? They are called what? Let me see if I can highlight this right here. They are called what? Somebody throw that word, that name in the back chat. They are called what? Alpha what? Predators. Those outliers. That abnormal volume. That strength of catalyst. Strength of chart value. Strength of fundamentals. Today we rocking and rolling while everybody else is bleeding. Even in my own sector. They might even get a sympathy push because I'm taking all the volume out of that sector and we rolling today. Now, if we correlate, that's another thing. Case in point, when Crime got that news that it was particularly being suited to be bought up by the company called Atria, right? Atria, depending on how you pronounce it. Actually, a company right around here in Virginia, up the street, up here in Richmond, right? They're the makers of cigarettes, right? Their parent company, I think, even Philip Morris, right? When they thought about put that press release out saying that they was thinking about buying Kronos, right? A Canadian marijuana company, right? Again, y'all can see how that's going. Tobacco and cigarettes, they trying to get in the game, right? Because they stay getting hit lawsuits on that tobacco. That made that stock go skyrocket. And then at that moment before it got unhalted, stocks like Tilray, CGC, and a few others, PXY, they were selling off. They were selling off. Tilray was already under $100 trading at like $90-something and change, 99, something like that, on the way to 98. As soon as the car got unhalted, it squeezed up like a bat out of hell with gasoline underwear on. It just everything with the spiking back up, retracing. Sympathy plays, sympathy runners, looking for anything to kind of get excited about. They raggedy beat down stock, looking for abnormal volume, unusual volume, income all these stocks started to run again. So they went up there and got extended because nobody was really excited about them beyond the fact that there was a sector breakout or a stock breakout that caused the sector to break out, but the whole sector couldn't keep up with the demand for Kronos, because it was the only one that was that was the alpha predator for the day. It was the alpha predator. Does that make sense, guys? Are you guys following me here? Are you guys getting this here now? Y'all see how relevant this stuff is and how relative it is to what we do every day, and how it's important to look for these alpha predators out there, right? These ones that's garnering their attention and the volume and the dollar value and all that. Is this stuff making sense to you guys? Press 1 in the back chat, guys. Press 1 in the back chat if you guys are understanding this here a little bit here. If it's making sense a little bit here, press 1 in the back chat. Let me see where you guys is at. I know y'all busy. I know you got the family around. You probably got the kids in your lap. Probably got things going on. I get it. You know, but again, I want to make sure we give you guys content. I'm trying to make sure you guys get some content, right? Kevin Hart, y'all gonna learn today. All right, all right, all right. Y'all, we all gonna learn today. Cause I learned too, right? I better sharpen my steel too. Again, steel sharpens steel. Simple as that. You only as strong as the strength of your what? Your think tank or people surrounding you. So if they're talking a good, you know, a good narrative and it's backed up by the data, then doggone it, you need to be right along with them. Why wouldn't you? Because numbers do not lie in terms of data value. If it's absolute, then it's absolute. If it's ambiguous, then there's more work to it. If it's just completely obsolete, don't even waste your time even dealing with it. That means it's outdated, antiquated, and no good for where you need to be what? Positioning yourself for. Simple as that. So don't focus on things that have no relative value to what you're trying to accomplish in the overall, you know, aspect of your career. You'll trade in that moment, this, that, the third. Don't be distracted, basically. Stay focused, stay disciplined, stay diligent, stay humble, stay respectful, stay with integrity, stay, you know, y'all get it. Because again, that's the best, those are some good ingredients to have going into a trade. You know, because you don't want to be distracted. You don't want to have nothing else on your mind that can compromise your what? Your attention to detail going into a trade. You can easily get off your game when you go into the market a little unmoved, unnerved, or emotional, whatever. That's why we talk a lot about what? Psychology. Y'all see the importance of psychology. It's a very important trait to have as a trader. You got to have thick skin. You got to have tunnel vision in a good way, not the bad way, but tunnel vision in a good way. You got to have jointed knees that only really point to forward as opposed to what? Going backwards. Again, that's why I liken my mascot in the stock market to a rhino. I'm a rhino. I'm a rhino. Right? Strong, massive, you know, intent, fearless. You know, only go one way forward. Hard to walk back. I'm trying to go forward. Small eyes see forward, straight. Big ears. Y'all get it. Y'all get it. All right. So in the animal kingdom, alpha predator is a predator what at the top of the food chain, upon which no other creatures what prey upon. Right? So what creatures are you? What kind of creatures are you guys? Are you alpha predators? Or are you what? Easy prey? Right? Are you shrimp larvae? Or are you what? A big mouth bass? Right? Are you a 1,500 pound blue marlin? Right? Or are you a what 20 pound bonita tuna or yellowfin? You see what I'm saying? That's just the facts. Are you a great white shark? Right? Or are you just a little seal, a little fur seal? I know it seems a little weird and corny, but that's just the facts. You gotta liken yourself to that kind of what mindset. You got to be that predator. You got to go into the market knowing that this market owes you, and it owes you greatly. It owes you from time immemorial. That's what separates trade. Average traders from above average traders. Their intent, their purpose, their focus, their vantage points, their leverage value, their will to not lose. Not that they can't take a bad trade, but meaning they're not going to give up on themselves or that opportunity. Right? So again, in day trading, alpha predator stocks are the ones that are independent of both an overall market and the sector. They stand out on their own. So you best believe Restoration Hardware after hours here, they went and picked up well over dang near $20-something, $30-something a share after hours, guys. Almost it closed at 123.65. The high was 153. It almost picked up $30 a share in a matter of 1 hour. Let that marinate. It takes some stocks an entire year to pick up $20. This stock did it in a matter of, to be exact, It did in every bit in about 50-something minutes and change. So in 15 minutes, excuse me, 50 minutes and change, this stock picked up dang to $30 a share. What could you do at $30 a share if y'all get what I'm saying? Y'all see where I'm going with this. Now tomorrow is going to be the Alpha Predator all day. Right now, people can't stop talking about restoration hardware right now. If you don't believe me, let's go see real quick. Let's go right over here to the chalkboard. All right, let's go over here to the litmus test land, and let's go see. Gotta love this stuff, man. Gotta love this stuff. Gotta love this stuff. Why wouldn't you? All right, why wouldn't you want to work hard to be the best at this? Your competition is not with anybody else, it's with self, right? And it's this market. So let's go look at the chatter. Look at there. Up $34.02 since about a posted day little mention of this stock. Look at this market sentiment. Has 50% of shares. Look at that. Short volume was up to near 50%. That's what caused it to really squeeze up higher and higher. Again, all these things were what? Relevant. We can go right over to quote media and see what the short sale volume was going into the earnings report. And that right there was another indication why the thing was probably going to squeeze too. Because again, the option volume value presented that way where it's going to what? Make a big move. Implied move. Implied move. You can look that up from as an option trader. It'll tell you what the implied move is. See what I'm saying? So it's not like, we're kind of lost and trying to even figure out those kind of things. You go right over to barchart.com or one of these little things and just go look up, these stocks here. Implied move, all that kind of stuff like that. IV, just crazy IVs. Option implied, me, IV, the whole nine. OI, open interest, the whole nine. Right? The whole nine. Right? Let's throw in our RH real quick here, just on GP, since we are talking about our restoration hardware here. All right, let's throw it in here. All right. Let's throw it in here. Let's see what the option. Hold up. I need this. Hold up. RH. Where is it for the option? There we go. Again, looking at the that was back on the which one of these? Okay, yeah, these are 4-day calls expiration for this week. I should look at the ones, go put on the other chart so I can go back and backtrack. But either way, you see that this thing was very bullish going into earnings. The call volume in relation to the put volume was enough in itself to tell you, hey, these people are not about to let this stock pull out, sell off, knowing that it had crossed some key levels of resistance going into this earnings. On top of that, again, coming in with a lower guidance. On top of that, knowing that the set they got bullish on the back of this news with this Trump tariff stuff, that how tariffs was affecting RH, that might be off the table now. On top of that, knowing that the stock was oversold going into earnings. On top of that, knowing that they had to hit a key level pattern of inverse head and shoulders that granted the opportunity to break out from there. On top of that, do we need to keep going? And then you went right up to the option flow chain and seeing exactly how excited people were about this trade. Because the call volume is staggering in relation to that of the put volume, which is pretty much left for dead. And all of these trades happened today. Look at that. This is today's trades. Look at this here. Look at the volume for the 114. Somebody were buying the 114 calls. Them contracts were costing $1,500 a contract. Bruh. Bruh. You see what I'm saying? Again, you see it here. Look at the contract prices. They're buying the 119s, the 121s, the 122, the 123. Somebody knew something. Somebody knew something. That's all I got to say. Somebody knew something that we didn't know. Look at the 124 calls. 657 contracts. 657 contracts. Let that marinate. Them contracts costing $800, $900 a contract. They were buying them up. They bought the 126, the 127. Y'all see this stuff? The 130, the people that bought the 130 contracts, look how much they were paying for it. You know, so again, this family, this is why we go hard. This is why we go hard. All these telltale signs and signals are all around us. We just got to learn how to capitalize on them. Simple as that. As simple as that. And that's just the facts. So we're not as handicapped as we think we are, you know, based upon what we don't know. Because, you know, we can always learn, but you got to have that willingness to want to learn. You have to have that willingness to want to get with other people that are, you know, aspiring or inspiring others to learn how to, you know, find that what they already have inside them to be better at what they do. You know, again, I'm humble in that respect to be able to offer what my level of knowledge that I can share with you guys. We learn together. Right? But again, it's about slowing things down and making it make sense. Simple as that. Slow it down, make it make sense. Don't go into a trade unless you feel confident about it. What, why, when, and where. Oh, excuse me, what, why, where, and when. Right? What, why, where, and when. What you should be trading, why you should be trading, where you should trade it, and what, when to pull the trigger. Excuse me, simple as that. If you cannot answer 3 of those questions, do not take that trade. Sometimes it's better to just sit on the sideline, watch it unfold, chart it from that perspective. Or go open up your paper trading account and go practice it, trade it the same way if it was like real money. You got to learn how to be disciplined. Not saying that you guys are, but y'all get my point. It's all about discipline. You refine your discipline day over day. No one has 100% control value of discipline. Everybody wavers every now and then, but you want to be more consistently disciplined than you are of what? Reckless. On average. Right? So yeah, that's important. So again, just finishing this out. So in day trading, alpha predator stocks are the ones that are what? Independent of both the overall market and their sector. The market cannot what? Control them. The market has no bearing on a stock that's running what? 100% in a day. When everything else in that sector is what? Getting drugged. If you don't believe it, go look at AETI today. What did it do? It got halted during midday, somewhere around midday, and the stock just still went bananas. Look at that chart. Gap, look where it came from. Look at that. Look at that volume increased value. Look at the volume down here. All that high volume came in right there. Then it came down from what? 56 cents a share, went all the way above $1.50. From pre-market, literally pre-market, around about 8:44, right? It went from 55 cents a share and crest up there near over $1.50 by what time is that? By 9:51. How about that? That's the power of investor trader. You know, so that's the power of investor. That's based about 1 hour. So 1 hour, you picked up, you know, man, goodness, y'all see it. Y'all see it. And you well over 100%. Well over 100%. Well over 100%. Show me anywhere you can 100% your money in less than an hour, or about an hour. And then that's my typical. Y'all see my little strategy right there. Y'all know I only got like one strategy, right? Because I trade everything, right? But I trade with some discipline and knowledge. So my little 9:50, 10 o'clock strategy pullback worked like clockwork. That's why I love that little strategy. My 9:50, 10 o'clock pullback worked like strategy. When did this stock go up there and hit that crest? Right? Right at what? 9:50, it started what? Pulling back. Inside that 9:50 to 10 o'clock area, that's when most stocks reverse and profit taking happens. That's when them bots start what? Selling off. That's when them bots start kicking in. They start selling off. Guess what happened? It dropped. It dropped. Broke VWAP, broke 20-day moving average, and dropped. 9:50 to 10 o'clock pullback. Worked like clockwork. Works like clockwork. Again, so again, no rhyme, no reason, but there's always opportunity and knowledge and knowing how to apply something to the market to make it overall, you know, a lot easier for you to be able to what? Partake in it. And this is why, you know, again, it's important to, again, put forth your best effort, put forth your best, you know, intent to do the right thing in terms of, your diligence, value, and your discipline. It's what you do when no one's watching, which is, determines your what? Your worth value, right? Because basically we're alone when we trade anyway, which is good because you don't want to be distracted, but y'all get my point. All right, so real quick, let's finish this out. So therefore the next rule is about alpha predators, right? Rule number 7: retail traders trade only alpha predators, high relative volume stocks that are fundamental catalysts and are being traded regardless of overall market. Let me read that again. Excuse me. Retail traders trade only alpha predators, high relative volume stocks that have fundamental catalysts and are being traded regardless of the overall market. Meaning, if I'm watching it, chances are Over Davis is watching, Over Gordon is watching, King Hughes is watching, the whole family, Brother Dog, all you guys. If we watching, the chances are somebody else watching, because again, it popped up on our radar some kind of way, and again, it's drawing our attention. So what makes a stock an alpha predator? Usually it is what? It is the release of fundamental news, right? A catalyst about the stock either the day before or during the same trading day. A la Crun. Crun got that news today. The stock got halted, opened up and squeezed up like, again, bat out of hell. It was lights on after that. And then they had lights off at the end of the day when it sold back off. Right? So important news or events for companies have what? Huge effects on what? Their value in the market, and therefore act as what? Fundamental catalyst for the what? For the price action. Right? Fundamental catalyst, we talk about what? Price action. That's all it is. So fundamental analysis and fundamental catalyst are two different things. Fundamental analysis is what? Earnings per share, short volume, RSI, gap value, market cap, where it's at on the 20-day, the 50-day, right? In relation to the fundamentals, it's all fundamental, in the technical, it's all relative to that level of fundamentals. Acquisitions, right? Debt value, EBITDA, right? All this stuff matters, right? So but the fundamental catalyst is the price action that is what is consequent to that of the catalyst, right? Because of that, abnormal volume came in, lights out to the upside, lights out to the downside. As mentioned in chapter 2, some examples of fundamental catalysts are stocks that make them what? Suitable for day trading include earnings reports, a la RH tonight, earning whispers, pre-announcements, right? How to go kind of foresee the future. We looked at earning whisper earlier, right? Now y'all see why I do what I do. Now y'all see why I like to trade a lot of earning plays. You see the criteria here. I'm not doing that no special than the next person had. People like, man, how you always find these stocks, man? How you always catching these stocks, man? How you always getting in early? Like, I'm following some basic fundamental algorithms and techniques like everybody else do, or have the opportunity to. That's why I'm constantly on, earning whisper and all the other market chameleon, this, that, and the third. I'm looking for what? Prey. I'm a great white. I'm looking for prey. I'm looking for prey. Right? I'm over here. I'm searching for prey. I'm looking at the charts that they're displaying. Right? I'm looking. I'm seeing Dollar General here bouncing off this trend line, holding it like a champ. I'm seeing AutoZone here was trading within this trend line zone. This wedge pattern here, right? And break out above it. Right? I'm seeing BMO, come down to hit some key levels of support and couldn't hold, barely holding on and fell beneath it and barely sitting at T-line level of support, highly oversold. Doesn't necessarily mean it's going to beat on earning, but it's an oversold. I'm seeing Toll Brothers ride this trend line to the downside like a champ. Can't break above it. Keep hitting levels of resistance up this T-line, can't get above it. Has some weakness problem. But I also see on the bottom of the chart right now, I see what? A double bottom. So again, this stuff ain't hard to figure out. Con, same way. Bounce off the T-Sport line here. Got a big gap to fill to get back up in there as well. This $31 level, scenario. All right, again, we can go on for days. You guys see it. Cheat sheets, this for free. This right here cost me $3. Free dollars. I didn't have to pay for this. I go right over to a free site, extract it. You know what I'm saying? So this is why I say We got it good. There's people out there paying tens of thousands of dollars for somebody to go out and do this stuff for them, or at least either point them to the direction of all this other free stuff. How about that? Tens of thousands of dollars, 5,000, 3,000. Family, y'all see where I'm going with this. I have an interest to make sure that you guys, have the best opportunity that you can get out of this by not only trusting the platform, WeTradeHQ.com, but more or less trusting in the value that I want you to be successful. Not that I'm someone special, you don't need me to tell you that. But again, if you're my peer, would I not want you to be successful at this? Would I want to give you some bogus information that you can't back test and check and go, check it for yourself? Yeah, that's that value of, hey, this is why you need a good think tank around you. You see what I'm saying? That's why this stuff is relevant, and that's why it's important. And this is what's going to separate you from a lot of your peers that don't understand the power of the market. A free global commerce market opportunity where you don't necessarily have to ever worry about a job ever again in your life if you learn how to master this to the degree where you can be profitable at it and be consistent at it. Why they have to go and wait in these long soup lines and fill out applications and wait on this and wait on that and wait on this person to discriminate against them, turn them down and cherry pick around them. You saying, okay, I tell you what, I'm not going to fight you, corporate America. I'm not going to fight you, I'm not going to fight you guys. I got something that I can fall back on to the tune where it can do me a lot better than me having to spend all these hours sitting there looking at you and watching the paint dry, watching the clock move tick by tick just to get $20 an hour, $30 an hour, or $50 an hour, and I'm acting like I'm making a lot of money. When I could have took a trade just a few minutes ago and Restoration Hardware, and in 50 minutes, if I just bought 10 shares, right? If I just bought 10 shares, right? If I just bought 10 shares, right? That trade would have cost me how much? Right? It was trading $123 after hours. I mean, before the bell run. If you bought 10 shares, that trade would have cost you what? $1,200 some odd dollars, right? $1,200. The stock jumped and ran $30 a share in 51 minutes. So now you got $30 times what? 10 shares. That means you made a third of your what? Initial investment. 30%. You pick up 30% in 50 minutes. Your 30% output that you make on that job is going to be peanuts. It's going to be an eighth or a tenth of what your real worth is really worth. You see what I'm saying? That's a no-brainer. Slave wages. Why would I want to be stuck doing that when I could be doing this? Y'all get it. Again, this stuff ain't rocket math, rocket science kind of reality. You got to learn how to put two and two together to make it make sense. You guys feel me? You guys see what I'm saying? You guys get where I'm going with this? This is why it's important, right? So again, make it make sense. Find these free apparatuses, these free portals, these free opportunities, these free sites, whatever. Learn how to play the game. Build your dummy email account. I mean, everybody came from my previous training from other, when I was doing this, my own way, which I still do every now and then, here and there. You guys know what I'm talking about. That's why I always tell you people. You building a database here. You're building your own, again, you're running your own business here. You're running your own business here as a trading investor. So you need to build your dummy email account and subscribe to a lot of different publication sites. Get the free versions and allocate all your data that you need to be successful in the stock market into one portal. So you can always go and learn how to access. Then you can build some subfolders underneath, right? That dummy email. These for biotech. These for what? Finance. These are what? Pharmaceutical. I mean, you get what I'm saying. These are what? Emerging markets. This is what? Gold. This is, you can sublet that thing however you want. And all the publications talk about that news for that day, right? That's dealing in that interest that you had, you put it in that folder for what? Archiving later. If you have to go back and look at the article for what? From the last earnings report, right? That you got from a news publication, and you want to kind of find out what the guidance was going into that what? That previous, going into the what? The upcoming quarter, you go back and extract that straight from your what? Your file. See, oh, they know what guidance. So, and they saying now that the earning per share is going to be up higher than the guidance because they got the analysts rated it higher because they must have did something good. Okay, that's favorable news. You see what I'm saying? That's how you do this, guys. You running the business. Don't leave chance to win to the win. Be secure in what you do. Train, trade, train, trade, train, trade. But above all, what? Train, not trade. Above all, train before you trade, because it's important, right? It's important. You know, so again, this is why I enjoy trading on earning play. They're volatile, they're very risky, but again, it's dependent upon where you are in the game. It depends upon where you are in the game, which obviously what you're suitable for to be able to trade these stocks into their earnings report, this, that, and the third. So again, stocks that make them suitable for day trading: earnings report, earnings whispers, pronouncement, earning surprises, FDA approvals. I wasn't done yet. Here we go. Talk about the biotech. This is why I was a biotech killer last year. All right, if not there, still hit them up today. FDA approvals and disapprovals is important. Sell offs or what? Or breakouts. Unfortunate deaths, right? Always just a good short sale opportunity, or the puts. Short them to ashes, matter of fact. When that happens, I'm gonna short this thing to the ground, right? Because now you're really feeling for the victim. Even though they signed on for it, I get it. You know, they signed on to be a guinea pig in some cases, I get it. Some of them did. Some of them are just bad, the pill just raggedy. Again, we understand the nature of the business though. But again, opportunity for us nonetheless. Mergers, acquisitions, right? We talk about that M&A, right? That's what M&A means. You hear people talking about M&A. What's this company M&A, isn't it? Mergers and acquisitions, basically. You got if you don't have M&A happening within your company, that means you ain't growing. Simple as that. Well, Restoration Hardware has some M&A this past quarter. Yes, they did. Right? Alliances, partnerships, major product releases, right? Again, where do we see this stuff at? All over the place. Major contracts, right? Wins, losses, right? CE marks, patents, discounting, this grant, this, that, y'all get it. Restructuring, layoffs, management changes, right? Big restructuring project that's happened. GM, unfortunately, laid off 14,000 workers, 14,000 people going to go into the holiday season this Christmas without a job. Let that marinate. But they did that to restructure their books to kind of eliminate a lot of debt, because they can't keep up with a lot of the other companies that are innovating to go into the future. And GM just had too many cars in their pipeline that was not selling, and because of that, they got stuck with all this excess inventory. Can't push it, can't sell it. All that raw material being used as heavily taxed through tariffs, this, that, the third, and it was just weighing down their stock price, and also weighing down their company book value. Unfortunately, they had to lay off 14,000 people. Who do you side with? The restructuring or the people that got laid off? See what I'm saying? Now I can mess with you from a moral perspective. That's just the facts. A level-headed, critical thinking person can think on from both spheres of their brain. You can feel compassion, empathy for the people, and you also can see that, hey, this might be an opportunity, for the company to get itself right, so it can go maybe rebound and maybe go back and rehire these people out down the way. It's just always unfortunate either way. How they even got in this situation, right? Again, stock splits, stock splits, buybacks, debt offerings, right? We know what that means, right? Senior note offerings and stuff like that, reverse stock splits, all that stuff, buybacks, right? So it's important. So again, in chapter 7, I explain specific day trading strategies such as momentum, reversal, VWAP strategy, and moving average. For the moment, your main question is, how do I find the stock for each strategy, right? I categorize stocks for retail trading into 3 classes. Based on my experience, these categorizations provide some clarity on how to find stocks and on how to adopt a strategy for them. You will find other other categories elsewhere, and some of my fellow day traders will disagree with my categorization. So guess what? We all have our own way of breaking down the stock market, what we look for, what are our criteria that we look for. It all is relevant in the end of the day. We find end up in the same place, but everybody has their own flavor, so to speak, right? And that's all that means. All right. So saying with some justification that is very simplified. Before explaining these 3 categories, let me explain the definition of a float, right? A market cap, right? Market capitalization or a market cap, all right? So let me break that down. Before explaining these 3 categories, let me explain the definition of float and market capitalization or market cap, right? We know the float is very important. We know the market cap is very important. Float means the number of shares available for trading. Apple Inc., for example, on July 2016, had 5.3 billion shares in the market cap. Or excuse me, in the market. I'm just getting ahead of myself, right? All right. That are available for buying and selling. Apple is considered a mega cap stock. Again, we're talking about a lot of shares out there, right? All right. These stocks usually don't move much during the day because they require significant what? Volume and money to be what? Traded. So Apple shares might on average change by only what? $1 or $2 each day, which is a lot of money if you got a lot of what? Leverage, a margin account. But that's why you got to build up to get there, right? They are they are not very volatile, and therefore day traders don't like trading them, right? Because they can't get those swing, those big 170% moves like we saw with AETI. Day traders look for what? Volatility. That's what moves the market. If it's moving, I'm there. I used to say that a lot, especially last year. People like that. That's African report. He'll tell you quick. If it ain't moving, he out there. Right? If it ain't moving, I'm gone. If it's moving, I'm there. As long as it's current on the SEC filings and it's legal, let's go. Right? I'm not caught up in all the other stuff people sitting there worried about. If it's price action and I'm seeing some nice key levels of resistance support they can ping between, break out either way, I'm there. Because I'm there for the opportunity. I'm not there for the showmanship of saying I found it or you found it. Who cares, right? Because you still got to hit that buy button like I do. Simple as that. Simple as that. Right. So on the other hand, there are some stocks that have very low floats, right? So for example, Seska Therapeutics, right? KOOL, right? Everybody know about Cool. We've traded that before, right? Has only 1.2 million shares on the float. This means that the supply of shares of Cool stock is very low, and therefore a large demand can very quickly move the price of the stock. We love low float runners, but they can also be very dangerous too, because they can go against you in a matter of a second, nanosecond, and you'll find yourself down 15, 20%, the same way you just found yourself up 15, 20, 30, 40%. Especially if you don't have fail-safe mechanisms in place, like a trailing stop or a stop loss, this, that, and the third, or your finger on the trigger, watching the trade in real time. Right? Low flow stocks can be volatile and move very fast. Most of low flow stocks are under $10 a share, because they are eagerly staged companies which for the most part are not profitable. That's why they're trying to get to the big league. They're trying to innovate, whatever they can, so another company come buy them out. A la Chronos, under $10, low floater. Atria, they're talking about buying them out because they have a very key component that can help their business grow. Marijuana. That's a hot sector right now. Simple as that. Right? They hope to grow, and by growing further, they issue more shares and raise more money for the public market and slowly become a mega cap. Right? These low flow stocks are called small cap or micro cap stocks. Day traders love low flow stocks. Some do, not all. Some do. Depends on how you trade. If you want to deal with all that risk and volatility, then trade your mid cap, to a large cap or mega cap. Again, traded Amazon today, bought like 20 shares. Amazon, off the top, they're 1772. Asset dropped all the way down to about 160, 161, so around there. Made over $100 something on that trade. Low commissions because only 10 shares, right? And not a lot of risk that was afforded to me, because guess what? The stock movement and the trend was confirmed, and I didn't have to worry about it making any kind of abnormal movements that really caused me to lose a lot of money because the float was low. So 10 shares, 20 shares turned into over $100 something. No commissions, basically, because I had to pay for a lot of shares in that regard. So these stocks are extremely volatile, moving 10%, 20%, 100%, or even 1,000% in a day. I've been in 1,000% runner in a day. Matter of fact, my biggest was a 13,000% runner. I only got like 11,000 some out of it, and like 10,000 and 11,000% out of it. Some other people I know that got 13,000% out of it. I still actually hold some of them shares of that trade still to this day as a trophy reminder. I didn't even sell the entire position. I held some just on GP, just to remind myself of, man, I was actually a part of a 13,000% run in a day. That is crazy. 13% run, 13,000% running in a day. Let that marinate. All right. Let that marinate. Matter of fact, let me pull up the stock. I'll show y'all what I'm talking about here. Y'all can Yeah, that was, I mean, come on, man. I mean, we talk about stocks that move 10x and 100x, you know, and all that, and, you know, 1,000x. Yeah, come on, man. Y'all know what I'm talking about. Just the idea that, you know, we can find ourselves in such an opportunity like that, which is just staggering, right? It's just staggering. So that stock was ALTR. ALTR is the ticker symbol, right? ALTR. Matter of fact, let me see if I can real quick. Let me get ready to get off here in a minute here, you guys. I know you guys got things to do. You got the families to take care. You got things to do, whatever. Get prepared for tomorrow. But I did want to get this day in and, you know, get some good information out there and some good training in too, because again, you know, we missed yesterday. And hopefully, yeah, I can go live tomorrow doing market hours and we can build, you know, build there as well. But then I think I shut down my OTC capability on here. I showed it. God dang it. Let's see. All right, so let's go back to, let's go to the, when we called it, it was back on, hold up, this is the, no, that's not it. Let me go back. I need to go back to the 3 year. Oh, that's the 1 year. No, it was before that. Yep, there we go. Look at it. I still got my, look at it. I still, y'all see this right here? I still got my bands up. I still got the bands up, you know, from that day. Where like, if this thing break above that, oh, it's going to be really crazy. See, look here. I still got my old bands waiting for this thing to get back above there one day. This thing came from 000, 0006, 0007, which that's when we were trading at 000. Actually, we were trading at 00. You know, it was like 00. I got in at what 00. I think it's like I had to go pull the trade up. All right, so I don't want to just say it and then be wrong, but either way, let me show you. Pull this up here. But I was in, you know, right around here, like 005, 004, somewhere around there, right? That's when the volume started coming in. Everybody started posting alerts saying, "Hey man, this stock ART, bro." Go, you know, and I went to tell everybody else, you know, I stuck again, rolled down here from that point. Look where we went from, guys, from 005 all the way up, all the way up, all the way up, all the way up to 15 cents a share. And I still got my bands up from that day. And I was selling it up into this area around here. This 14 change area. I was selling the rest of my shares off in that area there. And I kept a very tiny small little bit. Y'all do the math on that. From 002, 0001, you know, excuse me, 0001, basically 00, you know, 00 like 2 and 001, all the way up to 14 and then 15 cents a share. How much is that in terms of percentage value? Let that marinate. That's when I was a hardcore OTC player too. I used to tear them OTC stocks up, crushing them. Marijuana plays, all of them. This one here actually had an FDA approval, and that's why I ended up buying it. That's why I bought off of FDA, some FDA news. And here go the news right here. Here go the catalyst right here. Here's the catalyst right here. They got an FDA FDA grants. The ALRT clearance for its insulin dose adjustment. Y'all know insulin is a very big business in this country. Diabetes here, right? They got an FDA grant. A little OTC stock traded at 001 a share got an FDA grant for its innovative insulin dose adjustment IDA feature and management system. And not only did that stock, again, y'all saw it, y'all see it. I just leave it at that. So I can officially tell somebody I was a part of a 13,000% runner in a day. I don't have to talk it. I can go show you the receipts. I still got my bands up there too, and I still actually got the stock in my in my portfolio. I mean, I kept some of those shares as a souvenir, basically. They always remind me. So just like ever get back up there again, you know, I could be like, hey man, you know, this was a deal. And look where it's at now. Now it's still above what? Now it's above 4 cents a share. That's a big move coming from where the stock came from. I mean, look at it. You know, look where it came from. You know, the year of the chart looks pretty good still. You know, 1 year from now, look where, and that's what's interesting, because a year, right, when they make that move back on 9/11, I'm excuse me, 9/18, right, 9/18. Look where it's at on, you know, around that same time frame. A year from now, you know, a year later, excuse me, basically, it's way up here. You know, still above what, you know, 6 cents, 6 cents a share, coming from 0001. Still good money still in this stock. You know, now again, you buying in here, you still waiting for, you know, next move of what to, you know, be bought out by a bigger company. All right, but either way, you know, the stock is still what? Still in action. They got the FDA grant. You know, they got the FDA grant. All right. So again, so that's it, guys. Like I said, I just want to touch on that. So again, just going off the book here. You know, again, you guys, I'm gonna post the book in the back chat. You guys already should have it either way. If not, I'll post in the back chat. Again, very vital read here. It's a very intricate read based upon where we are. That's why we're gonna dig deep into this book. Now, because I know I've been going from different lesson plans to other, because I have a lot of them, as you can see up here. Got, you know, steps to get started, market whisper, swing day trading, reading the tape, the difference between art and science. We talked about that last time. Understand the value of candles, right? Another one, right? Another one, constructing the candlestick lines, how important it is. We're gonna touch on that stuff in the next session. Again, that's why I want to try to have them more, you know, back to back, you know, much as I can, to really get you guys going. Again, I know I'm just getting started too. You know, with WeTradeHQ.com, I do have a lot of things I want to, you know, I'm gonna actually, you know, inculcate to the fold of this opportunity, not only just for, you know, for myself, but you guys, because again, without you guys, I don't have this opportunity, right? So I'm always humbled by that, you know, for that value that you guys put forth in that. And it's not so much about the value of the money. Again, you know, come on. I mean, there's people out there charging tens of thousands of dollars, and they don't go into this kind of level of depth. Not to say that I'm, you know, anywhere, you know, close to somewhere where they are, better than they are. I'm just saying, when you have an interest to make, want to see yourself, you know, see that the people around you are successful, right? You'll go out your way to give them some good, you know, relative value, a good relative data, so they can benefit from it, right? And that's why I took on this journey, because I do have a passion for what? Sharing the knowledge, you know, sharing and teaching, whatever you want to call it. Because my goal is, hey, let's dumb it down. Let's make it make sense. Let's dumb this stuff down. Let's make it make sense. Dollars and cents, that is. You know, that's why I'm, you know, I have this fervent nature, right? To really want to be, you know, the best trader I possibly can be, and then share it with others. And I'm looking at all these intricate levels and attention to detail, things that people overlook. But that's just me. Again, I'm just crazy, I get. But I enjoy this stuff, man. I enjoy it. All right, I enjoy it. All right. So again, I'm gonna post this book in the back chat so you guys will have it as well. If you don't already have it, you should already have it. But that's why this is like the Bible or the gospel of day trading. Everybody should have this book. Everybody should have this book. Matter of fact, you should actually go buy the hard copy value, even though you got the free PDF, and put it in your collection of hardback books. Because this is, you know, again, a lot of this stuff, you know, cross lines in terms of real life as well. A lot of good life lessons come out of these books, because you're dealing with what? Emotion, psychology, business management, you know, compartmentalization, you know, comparing, contrasting, data point referencing. You're dealing with a lot of stuff you learned in higher learning, high school, on your job. It's all relative. But the great thing for us is that we get to apply this data to the market in real time, but most people don't get a chance to use none of those skills on their actual job, right? Because they got a robot syndrome. They got to do exactly what people tell them. In the market, we get a chance to utilize this knowledge. We get a chance to utilize this stuff, you know. And the outcome could be, I mean, you know, come on. Y'all already know. $300-400 in a day, you know, $100 in a day, $1,000+ in a day, $2,000, $3,000, $4,000 in a day, you know, pushing buttons, reading charts, having fun. Come on, man. Come on, guys. You know what I'm saying? That should be enough to motivate you alone. You know, that in itself should be enough to motivate you in itself. You know, so again, that, you know, we got to stay at this thing. We got to stay humble, and we got to stay what? Digging and searching and grinding. Humbled and hungry. That's one of my little favorite little slogans and mantras and sayings. Humbled and hungry. Humble enough to what? Research and you know, be open to opportunity and information and data. Hungry enough to kind of search it out and dig to kind of what? Stay relevant, you know, and relative in the game. You know, simple as that. All right. So again, that's it, guys. Let me yeah, we're gonna shut it down here. Again, you know, definitely, you know, a lot of, you know, impactful information, a lot of, you know, good, you know, knowledge that we can, you know, definitely build upon. You know, definitely, if you ask me, I always enjoy this stuff, no matter what it is. I get excited because, again, all I'm doing is every time we go down and break down this stuff, even though I've been through this stuff a lot, it just what you know, invigorates me. You know, it reignites that kind of passion and hunger that I have. Like, man, you know, this, when I first read this book or I read this portion, just like, yeah, man, this is what I seen this, you know, I seen these moments, I witnessed them, I traded them, you know, it all made sense because the outcome was what? Success, right? Or I had some levels of failure because I didn't follow this, that, and the third, or this, you know, got in the way of this, and because of that, again, the trade unraveled. But either way, that level of consistency starts building over time because now you have a litmus test to kind of what? Gauge yourself by, right? And that's what's important, you know, at the end of the day, holding yourself accountable, knowing your your risk value, and then from there just going out there executing. You know, they hand off the play to you based upon what the market offers you. You go out there, what, make it happen. You go out there and do your little what's the little running back? There's a very shifty little running back, Barry Sanders. You go out there and do your little Barry Sanders, right? Juke jug, hey, Juke mug, he can't even catch it. Right, that's what we are here trying to do in the market. Right. So guys, you guys got any questions real quick here, and we get ready to close out here. Again, power and profit to you all. Definitely appreciative of you guys' time, your sacrifice to be here. Not so much the value of the money, but more or less for the value of the information. Right? Because the information, if it's vital and it's useful, then guess what? It will turn the dollar. It will turn a dollar, because that's one thing I love about the stock market. Right? We don't own it. Right? So I can't just be giving you what I think I know you need without giving you all the game, because it don't work that way, because I don't own the stock market. So I don't have nothing to hide or shield, right? And from the information and how you apply it will determine your value, your payout, you know, your profit, you know. So, and all the information can be what? Back tested. You can go back and what? Back test it. You go back and back test every bit of this, right? And that's why I love this stuff, because it puts us in a different category of people out there just can just say, hey, you know, I got this, you know, this special order, you drink this here, and yeah, this, that, the third happen. Y'all know everybody got a special order out there. They tell you that it does it all, right? Yeah, okay. You know, but no, here's some data, here's some information, here's some opportunity that we can utilize, you know, and from that we can find ourselves what? Getting to the bag. We can find ourselves acquiring the bag. You see what I'm saying? So that's why I love this stuff. That's why, again, I enjoy the thrill of the chase in terms of the information. I'm constantly chasing the information. All right. To get it real quick, guys, got any questions? If you got any questions in the back chat, please post them. You know, if not, if it comes to you later, post them in the back chat, you know, in the Discord room. We'll get to it back, you know, in the Discord room. Again, that's another place place of operation that we moved from. So don't hesitate, post it in there. You know, hit me up, inbox me. You guys got my information. You guys should have my phone number too, just in case y'all want to ever call me. I'm approachable, right? You know, I ain't got nothing to hide in that regard. Call me up. If you need my number, let me know. I posted it, you know, posted in the Discord room. I'll send it to you. And okay, you might just want to call me on the blue, talk about some stuff, you know, related to the market, whatever, just life, you know, whatever. Hey, I'm open. You know, in that regard, you know, unless I'm busy, whatever. But aside that, I mean, I'm open to, you know, engage my brothers and the sisters too. We actually gonna have some sisters coming here in a minute too. I got some sisters been hitting me up saying, man, I'm interested in the mentor. I'm about ready to pull that trigger. I need this. So I'm enjoy that too. Again, it ain't no gender when it comes to this. It's all about one thing: the bag. The bag is what? Genderless. Right? The bag is genderless, so it doesn't matter. So again, we want to treat each other with dignity, respect, and integrity, and no matter who the trader is, right? Because again, knowledge is power. Right? It has nothing to do with the gender, right? So that's it, guys. So you guys don't have any questions of your brother here. I'm gonna get ready to sign off here. If you got any questions, definitely let me know real quick here. Post it either in the back chat and or just hit me up in the Discord, and we'll get some information for you that whatever that you need to kind of help you out with your question. All right. So again, if you guys did enjoy the build tonight, the session, definitely let me know. Press 1. If you enjoyed the build tonight, definitely press 1 in the back chat. If there's areas I need to improve on, by all means, hit me up, let me know. Again, I'm definitely about doing the work of the people. That's what I'm here for. More important, I'm here just to enjoy the process, because again, I enjoy data, I enjoy information and what it does in terms of increasing our knowledge. Because without it, we're pretty much just living in the dark. We're walking blind, right? And the blind can't lead the blind. Y'all heard that saying before, right? So I can't be blind to this and be talking about leading somebody else. I got to have an understanding. I have to have a way to present this stuff to you guys in a way where you can comprehend it, right? And then to go apply it. But more importantly, you can go and back test it. You can go back and back test this stuff. You can do a compare and contrast. You can comparative analysis, right? You can go back and see if this stuff is useful for you in your your endeavors, in terms of how you trade, because it doesn't matter if you trade Forex, again, crypto, equity stocks, ETFs, mutuals, futures, it doesn't matter. Again, it's all patterns, trends, and price action. And because we know now that price action is also likened to that of what? Fundamental analysis. We just read that. But when I tell people that, they're like, no, that's a part of fundamentals, price action. Investor sentiment, another way to look at it. Right? Technical patterns and trends, that's all what? Technical stuff. Right? That's it. That's why this stuff ain't as complicated as most people make it out to be. The only enigma is what? Market makers, right? And geopolitical news, things that can turn the market on a dime, and this, that, and the third. But that's why we got to be privy to that. And we got to make sure that we're not overexposed to potential scenarios that may cause us to be faced with that kind of adversity. And we have to make sure we keep our risk management game tight. So this case, it goes against us in the moment, we're protected. We got our backside protected, literally. Your parents, you take, protect your backside, right? That's just a fact. You got to protect your backside, right? It's a marathon. It's not a sprint. Again, it's a marathon. It is not a sprint. You got nothing but time. Some of you guys are like, young budding, males, and again, you got come on. Imagine when you're gonna be 5 years from now. Shoot, imagine when you're gonna be a year from now, 6 months from now, 2 years from now. Imagine where you're gonna be. That should be enough to get you excited. Because that's what I think about. I'm like, man, another year from now, 2 years from now, bro. And I'm like, I be talking to myself like that third person, like African Emporium, bro. I'm one of them types, like, bro, you creepy, African. No, I'm like, bro, sometimes you got to check yourself. So I be checking myself, like, hey, yeah, a year from now, you're going to be even more. Hey, 2 years from now, you're going to be, hey, 3 or 5 years from now, oh, it's a wrap. We trying to buy some islands somewhere. No, it's a kid. Yeah, me make a smart decision. You're going to buy some more properties, right? Gonna start leveraging opportunities out there or whatever. So, again, I'm working on that to better that consistency so I can, again, be able to do the things I want to do for my family and my mother. Again, everybody got their rhyme, their reason, but y'all get it. So that's why we take this stuff serious. That's exactly why we take this stuff serious. All right, with that being said, guys, I'm going to get ready to get off here unless you guys got anything for your brother here. I do appreciate you guys again. As I always say, salute to you all, power and profit to you all. My best to you and yours, your family, and your future, and everything we do in the stock market. Again, in your free time, don't hesitate. Hit that, hit those portals up. Find ways to get to the bag. You need some good little checklists and study sheets to kind of work under and work through. Hey, I'm here to help you with that. Again, that's why I set up some of these lesson plans in a way where they kind of automate, you know, through all these different various books and this, that, and the third for us to kind of focus on, right? So next week we're going to talk about, the next session we're going to try to talk about what? The candles and stuff like that. You know, I had that on deck, you know, but again, I want to stay in this book, How to Day Trade for a Living, because I know this book is one of the most relevant, you know, source references out there that really gives you some really, really good insight. I mean, it really brings good insight to the average trader, you know, and it's relevant to today, you know, in a lot of ways. It's not antiquated. It's not, you know, kind of like thumbnail books, even though that stuff is still valuable, but it's still relevant to this day. You know, so again, we're going to keep digging in this book right here real hard. And then we can go back and touch some more, a little bit of how to day trade, you know, how to, trading for a living, psychology, you know, money management. We're going to touch that book again. That's why we're going to, you know, we're going to keep building. We're just going to keep building. And again, before you know it, y'all going to know this stuff like, you know, at the back of your hand. It's like, okay, this is why this is important. This is why I can't make this move unless I have this down pack and understood. That's when, again, light bulb goes off. You know, light bulb goes off. All right. So again, it's easy. It's tight work. Y'all get it. All right. So that's it, guys. Let me get off here. Again, if you have any questions, hit me up in the back chat. Whatever, you know, Sam, I'm available, like I said, in that regard. Until next time, power and profit. Uncle Johnson there, life, prosperity, and health to you all. Again, and don't underestimate your power, your strength. Realize that the bag is not going to secure itself. The bag is not going to secure itself. It needs you. It needs you, all right, to secure it. All right. Now go out there and figure out how to secure it. Simple as that. With the help of your peers, with the help of, you know, others, myself, whomever, books, PDF, whatever. That's what we're here for, learning. All right. All right, gentlemen, that's it. So let me get off here, guys, and go and tend to my family as well. Get my little evening started again. From one shift to the next, right? No time off. Y'all see it? Hey, it's serious. It's that serious. All right, but that's it, guys. Enjoy your evening. I look forward to hanging out you guys again. You know, holler at you guys tomorrow. I hope I get a chance to go live tomorrow during the day hours so we can get some intense, you know, real-time action in, charting in, looking at some, finding some runners. Again, that's when I get back to doing that. I used to do that a lot, but again, things, you know, got busy around my part, and I couldn't do it like I was doing before consistently. But I do want to start doing that again too, right? Really make, you know, this value worthy than what it already is for you guys as well, right? So that's it. All right, guys. I'll talk to you guys later. Power and props, you guys. I'll see you guys in the AM.